better financial position companies, and in that way you could still make money, maybe not as much as you were before, but it's as important to protect principal as it is to make basis points in yield in an environment like this.
All right, gentlemen, we're leaving it there. Thank you. Barry James with James Investment Research and Michael Cugino with Permanent Portfolio.
Thanks.
All right, Facebook selling off again today as the drama surrounding the management there continues to play out. Now down about 28% over the past 6 months. On pace now for its worst month in more than 4 years. What could be next for the stock? Let's bring in Yusef Scully. He's an internet and digital media analyst at SunTrust Robinson Humphrey. Yusef, welcome. Good to have you with us. Is what's been reported in the papers, what seems to be going on behind the scenes at Facebook, a threat to its fundamental business model? In other words, basically advertising and consumer engagement?
Look, I think they're at a very, very important point, a point that frankly reminds me of where they were 6 years ago in 2012, in September, to be exact, September in 2012, when everybody thought they completely missed the boat on mobile, and the stock was off 50% down to 18 bucks. And what happened since then was a stock that was a 10-bagger six years later. So what's happening right now is existential risk for the company, and I think the management team has decided to effectively crush the earnings in a negative way, i.e. bring down margins, invest very, very aggressively to try to stave this risk. And look, the jury is still out. My take is they should be successful in doing so. They have the largest balance sheet, they have one of the best names out there, and they have the will to try to do it. If they don't do it, then I don't think it's a Facebook problem. I think a lot of other internet and digital media companies will have the same problem.
Let me ask this question, though. I take your point about 2012 and what was going on there, and they were able to fix it, but they really had, in that case, a product fix. Here, it seems to me that the needle is tougher to thread because there is a trust issue that's at play here, and also a regulatory issue, not just in the United States, but also globally and especially in Europe. And those may be trickier solves.
No, absolutely. And I think if you look at GDPR in Europe, which is a regulatory framework that all internet companies need to abide by, that wasn't just done to attack Facebook or try to regulate Facebook. It was to try to regulate the entire industry. And so that's why I said what I said earlier. Now, to the effect or to the possibility of them being able to succeed at it, I go back to the issue that this is existential for them. Trust is something that is gained over time. In talking to advertisers, they are not going anywhere. In talking to or in looking at the user growth and engagement, last quarter they still added 36 million users. So they may have lost 1 million in Europe because of GDPR, but they're still coming in ahead of where they were 3, 6, 9 months ago in terms of users and in terms of engagement. So I think this is played out way, in my book, too much in the media, but the numbers are not really reflecting that.
You got a $200 year-end 2019 price target. Yep. I'm curious, what do you think the stock then is telling you? I mean, if you think that advertisers are not going away, are investors just misperceiving the problem entirely? Because Twitter shares are up nicely year to date versus Facebook. Are you telling me that there is no fallout here?
No, Melissa. I think there is absolutely a fallout, and the fallout has to do with two things. One is mismanagement of this whole security issue, which, to Tyler's point, speaks to the dent in credibility. And two is the fact that this has been a momentum stock really since the get-go. So a lot more people like it at 200.
I mean, there's a corporate governance issue that cannot be fixed and will never be fixed unless Mark Zuckerberg steps aside.
I don't know if he'll step aside.
Exactly.
He's the founder.
It'll exist
60%
forever.
of voting shares. So he's going to be there for the long haul. The issue is, can he change his ways or alter the way the board works to a certain degree to make it palatable to us and to shareholders? And I think he will, because he does not have a choice.
All right. Yusef, thank you. Yusef Scully with SunTrust Robinson Humphrey. Coming up, healthcare up more than 10% so far this year. Look at the names within the sector poised for the biggest gains and losses from here. Plus, retail's big week. A look at who is reporting what's expected and how they're getting ready for the holidays. And corporate debt at a record level with interest rates rising. Should investors be worried? And as we take a break, let's take a look at the numbers here. The Dow is down by almost 200 points. We're just at that 500 points down number. The Nasdaq is down by 3%. S&P 500 down by 53 or almost 2%. Power Lunch is back in 2. Front door. Front door. Armed, away, exit now.
And welcome back to Power Lunch, everybody. The healthcare sector, one of the best performing sectors this year. I guess it is the best, up 10%. Dom Chu here with a look at the stocks within the sector that are poised now for the biggest gains and losses potentially in the coming months. Dom.
All right, so Tyler, we want to look at the stocks that maybe have had recent downtrends, and that's what we're going to find some of the top of our list here with regard to healthcare stocks within the S&P 500 that could have the most upside based upon average analyst target prices. Now, according to those targets tracked by FactSet, a handful of the names among them that could have some of the biggest gains are Nektar Therapeutics, one of the worst performers in the index right now, by the way, on the S&P healthcare side of things. It could double from here if analysts are right about their target prices. Remember, they could still revise lower, but at the current time, that's where it stands. Celgene up 57% from current levels. It's also been in a bit of a downtrend as of late. And Align Technologies, this is the company behind those Invisalign dental products, up 53%. Mylan Labs, the big generic drug company, up 28% from here, among the big names with potential upside. And then Henry Schein, the dental products company, after a nice run higher, is now met or at its target prices. It's now hovering about 3% above it. So unless analysts change those target prices, Henry Schein pretty much topped out for the time being, Melissa. Back over to you.
That's like a glass half full sort of labeling, right, Don? Potential upside as opposed to how wrong the analysts are?
That could be, yes. and you bring into account, of course, Melissa, the argument that many people have is whether or not those analysts are right most of the time about their predictions. Of course, we could have a huge argument or debate about that.
All right, Dom, thanks. Dom, too. So what should we expect from biotech and healthcare as we approach the final stretch of 2018? Joining us now is Ronnie Gal, the analyst at Bernstein. Ronnie, great to have you with us. You're actually one of the analysts who like Allergan and mine. So what do you think happened with these stocks this year? that you didn't see at the beginning of the year when you set your price targets?
Well, they've done a lot worse than we thought they would, basically across the sector. I would take it that the drug sector essentially came out of favor in part because of the pressure from the government, as the Trump administration got to be more and more negative around their policies around the drug world. That essentially set as a headwind for the drug sector, and thus the names did not recover as much as we thought. And some of the names there on the list are names that we recommend, and similar products target to our peers, and we've been wrong on that to some extent this year.
Well, with the midterms now behind us, Ronnie, I mean, has anything changed in terms of your view when it comes to the risk of government interference with pricing?
So that's kind of interesting because that, like it or not like it, the drug industry is almost nonpartisan. On one side, you have some Republicans who are very much industry supporters. On the other hand, the administration and others are very much advocating for reform. And as much as the Democrats like to argue the drug industry is over-earning, a lot of them actually are industry supporters. Folks like Pelosi, Ashew are very much supporting the industry, and the industry is based in Democratic states. So when push comes to shove, they'll have a lot harder time accepting lower revenue for companies in their area. So I would take the next few months will be critical in terms of seeing whether the president and Congress can end up working together on actual policy changes, or it becomes just a matter of arguing against the drug industry, but nothing actually gets done.
But if the mood or the rhetoric doesn't change, won't that act as a wet blanket on the stocks? Even if nothing seemingly is going to get done, the threat of it would still be out there.
Yeah, I think that's absolutely right. And at some extent, if the sector recovers, that will probably end up as a headwind against it. But we were aware of that for such a long time that if nothing appears to get done in the next couple of years, my guess is there's probably some upside to the stock. But you're making a fair point. There's some sort of a cap to how far the sector can go before we know what the government will do about drugs in the long term.
Stock specific, Ronnie, in terms of Celgene, are we going to hear about reimbursement levels for CAR-T?
We almost certainly will. CAR-T has been unreimbursed for a long time. The doctor who runs one of the Harvard hospitals have already come out and said that Brigham Women specifically will not be able to continue to support CAR-Ts if there is no reimbursement code, and predicted the same is true for the other large academic medical center. So CMS has not a lot of pressure to come up with one. They almost certainly would, in our view, in the next couple of months.
All right, Ronnie, thank you. Ronnie Gal of Bernstein.
All right, taking a bite out of Apple, a new report today says the company is cutting back production of some iPhones. It's the second report this month to suggest that demand is slowing. With the stock near bear market territory, is now a buying opportunity for Apple. Trading Nation will debate that and take a look at the chip stocks hit hard again today. NVIDIA, AMD, Micron, among the worst performers. More on that ahead.
See.
Welcome back to Power Lunch. Mike Santoli. It's time for Trading Nation. Here's over Apple's iPhone demand, sending that stock spiraling today. Shares are now 20% below their October record highs, shedding more than $220 billion in market cap and putting the stock on track for its worst quarterly performance since 2012. So how should you trade Apple now? Ari Wald is with Oppenheimer, Stacy Gilbert with Susquehanna. Talk a bit about that. So Ari, how much damage has been done here to Apple from a technical perspective?
There's been some on a more near-term basis. The stock is surely succumbing to broadening market weakness. It's below this 194 support level that we've been highlighting. So I don't think there's a trading call to make here, but we're recommending for our longer-term clients that are benchmarked against the S&P 500 to stick with it. I think exposure is still warranted, and here's why. If you look at the stock relative to the S&P 500, support levels are still intact. It's still correcting back into its 6-year breakout versus the market dating back to the year 2012, and still in a relative uptrend as well dating back to 2016. So until you get back above 194, perhaps looks like it needs to stabilize a little bit more, but we think you give it a little extra flexibility. We think it's okay for the long term.
And Stacy, the stock is still, up on an absolute basis for the year, maybe close to 10%. Where does the sentiment breakdown bring you in terms of deciding where the stock goes next?
Sure, Mike. Yeah, if we look at the options market, it really is almost consistent with what Ari was talking about, that we may be at least approaching a bottom, if it be just temporarily here. One of the things, and again, to Ari's 194 level, within the option space, there seems to be suggestive flow that we're trading between this level, maybe $195, that we may be range bound, that we're not really positioning for a breakout. And this is interesting because this is contrary to what we saw in Apple for almost 2 years straight within the options. The positioning was almost always upside call buyers, always positioning for that upside. And as the market de-risked over the last couple of months, we've seen that shift in Apple as well. So I would say right now, what we're seeing in Apple from a flow sentiment is that we may be much more range bound rather than breaking out to the upside, or at least seeing any more weakness here.
All right. Well, after these setbacks, maybe range bound doesn't sound so bad for some of these big tech stocks. Thank you very much, Ari and Stacy. And for more Trading Nation, head to our website or follow us on Twitter @TradingNation. Melissa, back to you.
Mike, thank you. Coming up, chips getting crushed again today. Closer look at what is driving today's losses, plus retail rundown from some big names set to report today to the holiday rush kicking off. We're breaking down what to watch and how to trade it. Power Lunch is back in 2.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
In volatile markets, unless you're an extremely short-term trader, it's usually best to avoid buying or selling during the first and last hours of the trading session, as that's when volatility tends to be the highest. And when volatility picks up, often the spread between the bid and the ask price will increase, and that's never a good environment for buying or selling.
Hello, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Christopher Watts receiving 3 consecutive life sentences without the chance at parole on Monday. This comes nearly 2 weeks after he pleaded guilty to 5 counts of first-degree murder for the killing of his wife and 2 daughters. The judge called it the most inhumane and vicious crime he had ever seen. Saudi Arabia's King Salman called on the international community today to halt Iran's nuclear and ballistic missile program. He also reiterated the kingdom's support for the United Nations efforts to end the war in Yemen. These were his first public comments since the murder of the Saudi journalist Jamal Khashoggi at that country's consulate in Istanbul on October 2nd. JBS USA has recalled nearly 100,000 pounds of ground beef over possible E. coli contamination. The products have the establishment number EST628. They were produced on October 24th. Luckily, so far, no illnesses have been reported. And take a look at this. Several of the world's top big wave surfers stayed in Portugal after the World Surf League event to ride the giant waves on Sunday. The WSL Big Wave Tour held the challenge Friday and was won by South African Grant Baker. Waves at this particular location easily 50 feet high, which is, that is not pretty. But he's okay. That's the news update at this hour. Ty, I'll send it back to you.
That is some serious courage.
Yep.
All right, Sue, thank you.
You got it.
PG&E in the headlines once again today over the role the utility may have played in starting the Camp Fire in Northern California. Aditi Roy is in San Francisco with the latest. Aditi.
Hi, Tyler. PG&E shares are down about 6.5% this morning. This after the utility reported a second power outage near the Camp Fire to regulators after the close on Friday. Investigators are looking into whether PG&E was responsible for the Camp Fire, which has killed 77 people so far, scorched 150,000 acres, and destroyed more than 10,000 homes. PG&E reported a power outage in the area to regulators, which occurred right before the fire started. And now the utility has reported a second outage in the area shortly after the first reports of the fire. That filing came 8 days after the blaze began. Meantime, analytics firm RMS has estimated the insured loss for the Camp Fire will end up between $7.5 to $10 billion. And the Woolsey Fire's insured loss will land between $1.5 to $3 billion. And over the weekend, President Trump visited wildfire sites in both Northern and Southern California, pledging to help wildfire victims. He was joined by California Governor Jerry Brown and incoming Governor Gavin Newsom. And also over the weekend, the number of missing in the Camp Fire also shot up. It's now a little under 1,000. Back to you guys.
Aditi, are they doing anything about air quality? All right, we'll get to that some other point. We're going to check on the markets right now. Stocks here still losing ground. The Dow is down by 478 points, or 1.9% off the session lows. The S&P 500 is down by 52, or 1.9%, and the Nasdaq is off by 219. Leading the Dow lower, Boeing, Visa, Microsoft, and Apple. Johnson & Johnson, Pfizer, and Coca-Cola holding on to some gains. Meantime, take a look at the Nasdaq losers. NVIDIA, Align Technology, and Adobe. Those are leaning to the downside. And finally, getting a check on the pot stocks, Canopy Growth, Tilray, Kronos, all making some notable moves to the downside here. Tyler.
All right, Melissa, the oil market closing for the day, and Jackie DeAngelis is all over it. at the commodity desk. Hi, Jackie.
Good afternoon, Tyler. Well, oil prices getting a little bit of a bid today, about 1.25%. Difficult to move much higher than this with the pressure that we are seeing on stocks right now. Oil, remember, was just hit so hard. There needs to be another negative catalyst to push it past that $55 mark. If stock losses continue, that could certainly be a factor, but OPEC not taking any action to balance the market, that's probably the next issue. We're going to look for that in early December. Typically, holiday weeks can see some light volume, especially if parts of the oil trade, remember, have obviously been unwound over the last few weeks, guys. Closing today a little bit over 57. All right, thank you, Jackie. Jackie D'Angelo. It's time now for the Power Rundown Retail Edition with Courtney Reagan. We start off with a very big week for retail earnings.
Huge. I think we're all just trying to crush ourselves this week. I don't know what's going on, but a huge day for tomorrow for retail earnings specifically. And this year we have this early Thanksgiving and earnings, Black Friday, all kind of jammed in together. So with just 2 days before most of those doorbuster deals start, the focus will really be on expectations for the holiday quarter, and specifically that first really big weekend that we're up against now on Tuesday. Look for earnings results from Best Buy, Kohl's, Lowe's, TJX, Barnes & Noble, Gap, Ross Stores, and Foot Locker. All those names reporting throughout the day. Target CEO Brian Cornell, remember, said he is expecting a really strong holiday quarter, so investors will want to hear that reiterated on the call tomorrow, and also will want to see a strong third quarter to support going into this strong fourth quarter.
We know what you will be doing tomorrow.
Right? I think
haven't some retailers been a little cautious in their guidance?
Some, but the CEO commentary has been pretty strong. So I think that's kind of interesting when you've got the CEO saying, we're in a better position than we've ever been. We think we're going to be strong going into the quarter. And then the numbers are a little conservative. So take that as you will.
Topic number 2, L Brands out with earnings tonight after the balance act. And there's internal drama, of course, at this retailer.
Yeah, this is a really tricky one. So L Brand's 2 biggest brands, Victoria's Secret and Bath & Body Works. Comparable sales are up 4% for the quarter, and we know that because the company still reports those numbers monthly. They also just guided earlier in the month to 15 cents a share, so that's what we're expecting after the bell. But it's been a difficult road for Victoria's Secret. Those comps are expected to fall 2.5% in this holiday quarter coming up here. Victoria's Secret CEO Jan Singer resigning after 2 years. And then L Brand's outspoken Chief Marketing Officer Ed Razek made some comments to Vogue during some controversy. He said, look, in 2000, Victoria's Secret tried to do a TV special for plus size and, quote, no one had any interest in it, still don't. He also said, we're nobody's third love, we're their first love. That's a direct shot at competitor third love. So in reaction, the startup CEO Heidi Zak writing an open letter saying in part she's, quote, appalled, and to let women decide on what's sexy. That's a tricky one.
Topic number 3 here. The holiday retail rush is starting. Target announcing week-long sales. Black Friday is already here.
I mean, why wait, right? You got the internet all the time. You got stores all the time. So many retailers actually already did some Black Friday early sales, early access. Others are having access now or extending deals even after Monday. Here's a quick rundown. Target out today with some Cyber Week deals, including 15% off most items online on Cyber Monday. And then, of course, key deep discounts on some items. Amazon running Black Friday week deals that started Friday, running through Friday. Kohl's Black Friday deal started online today. Macy's Cyber Week runs this Sunday through next Wednesday. And then Best Buy offering Black Friday early access to My Best Buy members today and tomorrow. So you better do your homework and start your shopping list.
Not to undercut the importance of Black Friday, but does all this mean that Black Friday means less now than it did 5 years ago and will mean still less 5 years hence?
I'll give you that it might mean less now than it did years ago, but it's still retail's biggest day, and it's still expected to be the biggest day of the shopping weekend when you look at all together, both by spend and the number of people that shop. When you look at those big doorbuster deals, though, a lot of that has been pulled into Thursday, but then that becomes folks really kind of targeting their shopping. They know they want this one TV, this one PlayStation. They go, they get that, then they go home, chill out, come back to the stores on Friday and shop more leisurely. So it's still retail's biggest day.
A lot of work.
Yeah.
Too much work
I will never go to anything called a doorbuster.
Doorbuster, forget.
It's actually a lot of fun, you know.
It's actually a lot of fun?
It is. It's traditional. I used to do it with my family years before I was a retail reporter. We did it every year.
Yeah.
It's kind of all part of what I did with my aunt.
All right. Nice. All right. We're 35 days away from Christmas, folks. Just a few days away from Black Friday. As I said, we know where Courtney's on Black Friday and tomorrow. So as we gear up for the holiday season, which retailers will come out on top? let's ask Steve Sato. He's a former chairman and CEO of Saks. Let me pick up where we left off with Black Friday. Does it mean as much as it used to?
I think it does, but not just because of the sales. It's the emotional kickoff to the season. It's when everybody gets in the mood for shopping. Actually, the Sunday before Christmas is as big as Black Friday. So if you look at the MasterCard Spending Pulse forecast for the season, that Sunday, it's early, it's late. There are 10 big shopping days that are bunched together. Every Saturday is important.
Christmas is a Tuesday, so that Sunday is really important. That's when I'll begin my shopping.
Yeah, well, there'll be a lot of good deals for you.
I've already gotten Melissa's present.
Oh, but I think Courtney's right. It's, there's lots of important days. The deals have started early. The consumer's healthy right now. So you've got a business that you've got forecast in the 5% range in terms of growth. If you look at the data through October, the consumer's really holding up well. So the retailers really have to hit it now.
The consumer is holding up well, but aren't we conditioned at this point to wait until you get the 50% off sale? Or, I mean, aren't we conditioned now to wait for the deals to really set in? That Black Friday may not be the best day for all of the deals out there. It may be later in the season.
I think what you're finding is the deals are there all the time. So you're seeing deals, the ones that Courtney just described have already started. Consumer understands that absent some specific item, if they do the research, they may get a little bit better deal, but they can get the deals all along during this entire period. The reality is shop early, shop late, but you got to do it's this mindset that now's the time for the shopping.
Yeah, you never know what the price is because nothing seems to have a full retail price ever. I don't care whether it's the middle of June or the middle of December.
Well, that's why the apps that you have are so important. Mobile affects everything because you know what the prices are.
So who do you like? I'm asking like a horse race handicapper. Who do you like?
Well, I think a lot of the retailers that are playing in the omni-channel space, I hate to use that word because it's become ubiquitous, but the Walmarts of the world, buy online, pick up in store. They've made so many good investments in technology. Target's doing a great job. I love some of the things Kohl's, for example, is partnering with Amazon in some pilot tests. Anyone who's innovating is doing well. I think Macy's is reinventing itself. So you're seeing these big retailers who everybody thought were stayed.
Yeah, would you ever have thought that? I mean, a couple of years ago, you thought
Walmart's done a remarkable cultural transformation. I think Doug McMillan's done a great job of changing who that company is. So I think there are a lot of winners coming out of all of this.
You know, for a time, we were looking at the retail stocks and they were doing kind of well throughout a lot of the year until recently. So do you use the stocks and how the stock market's pricing retailers as any sort of gauge as to what the health of the retailers are?
The health of the retail business is very good right now. Consumers, 2/3 of the economy, at shopping, you're seeing real time. Through October, we were seeing 5% growth and the forecast for continued 5% growth. So I think the consumer is healthy. The stock market is backing off. It probably wasn't as bad as it was when they were depressed a year and a half ago. You've started to see some concerns, whether it's labor, inflation, tariffs. I mean, these are some things that are out there right now that are weighing on the retail stocks because they are affected when the consumer psychology gets concerned. So I am a little bit worried as well.
They are having their costs are going to go up. They're going to have to pay more for labor, and they already are. And they have to pay more for goods, depending on what happens with the tariff.
Yeah, but right now they're in a position, their inventories are in line, their margins are tracking well. Most of them are coming in pretty good on the earnings side. You had some good earnings last week from some of the people like the Macy's and the Nordstroms. A little bit forecast.
So let me tell you, we've been talking about sort of the traditional retailers, the Targets, the Macy's, and Nordstroms, the store people. How about Amazon? And I want to get you specific. My wife saw over the weekend in the lobby of a Chase bank an Amazon locker where they deliver packages if you don't want them delivered to your door.
Absolutely.
I mean, that's kind of genius.
Well, I think what you have right now is a convergence in retail. All of the brick and mortar retailers are understanding the importance of the web. All of the web players are understanding the importance of a physical presence. It could be a locker, or it could be a internet retailer makeup, a Warby Parker opening up lots of stores. So what you have is both of them moving towards the middle. I think the Walmart coming from one direction, the Amazon the other. I think they both win.
Steve, thanks. It's always to see you. Happy Thanksgiving.
You too.
You're going to be in D.C.?
I'll be in D.C.
monitoring
shopping,
doing some
the stores,
watching the stores.
Happy Black Friday.
Thanks, former CEO of Saks. Appreciate it.
Coming up, the growing concern over corporate debt. One economist calling it the most severe threat to the economy and the financial system. Should investors be worried? That's next. And as we head to break, let's take a look at the bank stocks over the past 3 months. Facebook, the worst performer, down 23%, followed by Amazon, down 18%. Much more on Power Lunch on this market sell-off straight ahead. Welcome back to Power Lunch. There is a record level of corporate debt that built up this cycle, and it is coming under scrutiny as the Fed continues to raise rates. UBS estimating there's $3 trillion outstanding of low-quality corporate debt, up from $1.6 trillion in 2010. Is this a rising risk that investors need to start paying attention to? Let's bring in Peter Bookvar, Bleakley Advisory Group Chief Investment Officer and a CNBC contributor. Peter, great to have you with us.
Thanks.
You know, people who might be skeptical of that argument in terms of it being a problem will say, rising rates have been telegraphed for so long. Any corporation who has not prepared for the environment of rising rates, they're just stupid. So why are we concerned about this? Why is this a problem?
Well, I agree. Every CEO and CFO in quarterly conference calls are asking about terming out their debt. Problem is that small companies, at least, 40% of the Russell 2000 has floating rate debt. Now, I'm sure a lot of them are trying to do swaps to try to swap into fixed to try to limit that. But overall, even if you do that and get into fixed rates are now rising as well. And for smaller companies, it's tough to term out into the capital markets their maturities. They are more subject to LIBOR type-based loans.
So again,
said often,
40% of Russell 2000 companies have floating rate debt.
Yes.
And how much debt is that exactly? And I'm trying to understand this in terms of the high yield investment index.
Well, the leverage loan universe is over $1 trillion. High yield is slightly less than that, but still above $1 trillion.
Then you also have the triple B universe,
Right.
which is half of the investment grade, which is about $2.5 trillion. And now there's worries about, okay, of the triple B credits, who's going to fall into the high yield land, with GE being obviously the fallen
Who's
angels.
exposed to the risk here? Who's exposed? Is it the banks? Is it the mutual funds? Is it the insurance companies? Who's holding these loans and debt?
Well, it's a great question. Now, the capital markets have been tapped a lot over the past 10 years to create a lot of this debt. But it's these CLOs that have been created and have exploded in size, and investors,
CLO
collateralized loan obligation, that's basically a basket of corporate loans. So you have a lot of investors that are holding onto that paper.
Sounds like CMOs.
Well, it's a packaged security that basically securitizing corporate loans. The question now is, high debt levels don't matter until they do. They begin to matter when you have rising interest rates and you have worries about corporate cash flows.
Yeah, you have a slowing economy.
So it's now the worries about corporate cash flows in addition to that rising cost of capital, and it's that combination that now all of a sudden people are beginning to care.
Okay, so let's recap here. 40% of the Russell 2000 with floating rate debt. Then you have the fallen angels potential of the companies that are currently the lower echelons of corporate investment grade debt, but may fall because of deteriorating fundamentals such as General Electric, or maybe even the oil sector, which is facing now declines in oil.
Exactly, and the risk. So people say, okay, I want to be out of investment grade because all these credits are going to fall into junk. But imagine being in junk that gets overwhelmed by credits that fall from investment grade into junk, and you see spreads widen. It's going to actually damage more of the existing junk credits, more so than investment grade.
They're going to get pushed down. The yields are going to get pushed higher.
Exactly, and there are a lot of triple Cs in that high yield universe.
Is it a concern for you, at least when you take a look at how this metastasizes potentially, that ETFs have been a great way of investing in the bond market?
Yes.
HYG is something that's probably in a lot of people's portfolios.
HYG, and also look at BKLN, which is a leveraged loan ETF, where you can trade that every day and it settles in 2 days, but the bonds within the ETF could take much longer to settle. So there's going to be a disconnect.
I just thought it was Brooklyn.
So what happens when there is a major disconnect between when you're trading and the settlement of the bonds?
Right, you could have the price of the ETF be much different than the net asset value.
Minor problem.
Yes.
Peter, thank you.
Thanks, Melissa.
Peter Bookvar, Fleet Advisory Group.
Already coming up, today's chip wreck, NVIDIA, AMD, and Micron logging the biggest declines. A closer look at what is driving that sector lower. That is next.
Disarm system now. Disarm. Not ready to arm.
That's it, JD. Go ahead and break that 2150 handle. Stop playing around. Break that handle. Let's go. I stopped out of what's name, so no worries. Still got some runners though. Still got some runners. Oh, do I should be re-shorting this pop here possibly? Seems about right. Seems about right. Good thing I'm not in my aggressive mode right now. Definitely getting after that. All right, so the CEO is stepping down. He is stepping down. Downgraded to a whole stifle, and they got the downgrades coming in just like I figured and just like I planned. Got him. So JD, the CEO, obviously Richard Liu, or his real name is Qingdong Li, is stepping down as the head man while he's dealing with these rape allegations. On top of that, again, there's so much stuff that was surrounding that stock. Again,
Welcome back to Power Lunch.
the downgrades are coming in now from these different analysts. Stifle just downgraded to a hold from a neutral position.
Josh.
So I'm pretty sure they'll get some more downgrades here in the next day or two.
The worst performer in the S&P.
And some people may try to upgrade, who knows? But right now, it's a very toxic company with the CEO situation with rape allegation that just happened back in August, August 31st to be exact.
That tracks the chips. It's down today, on pace now for its worst.
One of the reasons why I also shorted this thing in the earnings and bought puts. Again, that's not always an indicator of the the book value and just that and the third. But again, it's always a toxic reality where you can't focus on business when you got stuff like that and press hound you all the time. It's just never pretty. We saw what happened to Wynn Resorts. Steve Wynn. We saw what happened to the other companies too that went through that process, and it's never pretty.
Slash production orders for new iPhones and pressure in memory chip pricing. So what do bulls say to all this? Well, TJ Rogers, Cypress Semi's founder, was on CNBC this morning reminding investors that the two biggest products they own, their phones and cars, will require ever more processors in the future. But that long-term view is not finding many buyers in today's trade. Tyler, back to you.
All right, thank you very much, Josh. We appreciate it. Let's take a look at the Dow 30 heat map, if we might, as the Dow is down 399 points right now, and you see about 8 stocks are higher. They are largely drug stocks and what we would call consumer durables, including Coca-Cola. ExxonMobil breaking in there as well. More on the market sell-off when we return.
Be carefully.
Off the session lows and the sell-off, the Dow had been lower by about 100 points. from here, down 500, now it's down 400. One bright spot, though, throughout the session has been Coca-Cola actually hitting a record high, the highest level since its IPO back in 1919. And I bring this up because this, along with a lot of the dividend-paying stocks, have been viewed as safety stocks. If you take a look at the 5-year average on many metrics, every single metric, in fact, including price to earnings, forward price to earnings, price to sales, price to book, etc. You take the 5-year average of all those metrics, and right now Coke is trading higher than that 5-year average on every single metric. So investors have to really think about what they should want to be paying for safety in this market.
A safe stock.
Yeah.
On the other hand, all of the FANGs have fallen out. It is not a periodontal condition. It is called a bear market. Facebook down 39%, Amazon down 25%, Netflix down 35%, Alphabet down 20%. We call Alphabet G in there because it really is Google. And we should point out that something like 40% of all of the S&P 500 stocks are now also in bear market territory, down 20% from their most recent highs. There you see the S&P below 2,700.
Thank you for watching Power Lunch.
The closing bell starts right now. It's time for the closing bell. I'm Wilfred Frost in the New York Stock Exchange. A renewed week here on Wall Street. Volatility is back. Those stocks down across the board. Tech in particular getting slammed. But we'll speak to one investor who says this volatility is a buying opportunity. Plus, Apple getting hit hard today amid renewed concern over iPhone demand. We'll debate whether now is a good time to jump in and buy the dip.
And I'm Morgan Brennan in for Kelly Evans. Facebook shares are down nearly 40% from their July highs. And the stock is getting crushed again today. A shareholder tells us why she thinks major changes need to come from the top. Plus, David Sokol, former Berkshire heavyweight and the chairman of shipping company C-SPAN, joins us live to break down the impact of the Trump administration's trade policies on the global shipping market. The closing bell begins right now.
Good afternoon and a warm welcome to the closing bell. Welcome again, Morgan Brennan. 5 shows in a row now.
Yeah.
Outstanding stuff. Let's get right to the market action. Another volatile day here on Wall Street. Stocks sinking as tech weighs on the market. The Dow at the low down 512 points. Currently, though, down 430 or 1.7%.
Yeah, the NASDAQ is the big underperformer as well. It's down about 2.8% right now. All 3 major averages are lower for the month of November in this trading session. Again, our reporters are watching all of the market action. Seema Modi is watching volatility at the New York Stock Exchange. Bertha Coons has more from the NASDAQ. And Dom Chu at CNBC headquarters with a look at the most volatile places in the market. Seema, let's start with you. Morgan, it started with those comments from Vice President Pence over the weekend at that APEC summit, really not providing any comfort to investors. Experts now don't see that meeting between President Xi of China and President Trump of the U.S. to yield any substantive results. Trade-sensitive stocks like Boeing down about 5%. Macau casino stocks, widely seen as a proxy for China, are also underperforming the market. And take a look at some of the Chinese tech names. Alibaba, JD.com, which reported weak guidance, among others, are trading down. So trade and China growth concerns are playing out in different pockets of this market. Other parts of this market are actually holding up relatively well. Yields have ticked lower. The dollar is weaker. Gold is higher. And oil is actually stabilized here, Brent, at $67 a barrel. On the sector side of things, growth-related sectors, energy, tech, that are contributing to the downward move we're seeing today. Taking a step back, though, BMO Capital put out a note today. They say that the pullback that we're seeing in this broader market is actually an attractive entry point. Their price target on the S&P 500, 3150. Finally, this ETF snapshot summarizes this narrative that has been gaining traction over the past couple of weeks. That's value, dividend-paying names outperforming growth. Wilfred?
Seema, thanks very much for that. The NASDAQ, as Morgan already mentioned, getting hit the hardest today among the major averages. Let's send it uptown to Bertha Coons, who is at the NASDAQ with more on what's driving the decline. Bertha.
Yeah, growth is certainly not what's driving the upside. It is driving the decline. The NASDAQ 100 has so far held its October low. So have the communications sector and the chip sector. That's about the best that
can be said for those sectors. Chips in particular are near bear market territory, and it's not hard to see why. Big momentum names like NVIDIA have been hit by a double whammy of a slowdown in demand from the likes of Apple and other handset makers, which along with Apple supplier Skyworks today, both of those at new 52-week lows. But for NVIDIA and AMD, the slowdown in demand for Bitcoin mining has also been a big drag as cryptocurrencies have swooned. In turning away from tech since the quarter began, investors have been piling into some consumer names. Take a look at those gains for Walgreens and Starbucks and Ulta, which hit a new high today. And September's worst performer, Tesla, which has climbed out of correction and leads the gainers this quarter. Whoever thought, Morgan, that Tesla is now a value stock or a play for safety?
What a difference a couple of weeks make, Bertha. Thank you.
It's not a value stock there, but maybe a play for relative safety. Even that sounds wrong with Tesla.
Okay, well, the FANG stocks have been among the most volatile so far this month. That trend is continuing again today. Dom Chu is at headquarters with more. Dom.
Well, Morgan, Wilfred, you could argue that these FANG stocks are at the epicenter. The real kind of move lower in this market has been driven by some of these mega cap technology and consumer services / retail type names. So let's put a fine point on some of this. Facebook, for instance, on the F and FANG is now down more than 40% from its recent highs in late July. That translates into around $250 billion, near $250 billion or so in market cap lost, a massive amount. Amazon, same kind of situation, down 25% from its recent highs in early September. That amounts to around that $248 to $250 billion or so market cap loss. Apple, also moving to the downside again. It's lost about $218 billion during that span. That's something to watch there as well. Alphabet shares down $151 billion, and that's going to be a huge move lower, with Netflix at the end here, $62 billion to the downside. You take these sum totals up, and that means that FAANG, Facebook, Amazon, Apple, Netflix, and Google parent company Alphabet have lost more than $920 billion in market caps, give or take a few $1 billion based upon market gyrations. And for perspective, that means that these FANG stocks from their respective highs have lost as much market value as Apple is worth currently, guys. Wilfred, more than back over to you.
Ouch.
Yeah, ouch indeed, Dom. Some great perspective there. Thank you very much. Our next guest says volatility is your friend in the long term. Let's bring in Jim Kahn from Wealth Enhancement Group. Jim, thanks for joining us. I mean, let's focus in on those big tech names, first of all. Is that a buying opportunity for those names, or is there further to go to the downside?
Well, let's step back and look at the big picture. When valuations are crazy, and we can use the word crazy at this point, because when we look at the valuation of value stocks versus growth stocks, we're at a 4 standard deviation outlier. That's more than we saw during the top of the dot-com boom. Okay,
we're still at that spreading.
But we've come down a little bit, but we just peaked maybe about 3 weeks ago. And so valuations are truly crazy. So no one's talking about rising interest rates.
Keep bleeding, JD. Keep bleeding. They ain't over yet.
From just like 18 months ago, interest rates have
sell a couple of those puts, leave some more to keep running.
Giant sucking sound of cash coming out of the economy.
Put it out of
when you take that much cash out, bubbly valuations, they can't last. So they can't last in tech stocks. They're not lasting in art. Everyone's following the art auctions last week. Big prices, no headlines, but everything underneath those big prices didn't work. If you look at luxury goods, if you look at luxury real estate, all those prices are falling.
Yeah, so brother Rakim, I don't know if you're still on or not, brother. Those retail stocks right now definitely, are very problematic.
So let's go back.
Even though again I took JCPenney in the earnings, because the calls were obviously dirt cheap, but again the stock was at a very kind of left for their reality, and also having the idea that they had a new CEO coming in, bring new life back to the asset. It seemed to be a great lotto play at that time, and obviously it paid off. But as a whole, again, watching that stock, you want to see how it performs here on the back end of this holiday season. This blitz of marketing and Cyber Mondays and these old fugazi, so-called quote unquote Black Friday sales and this, that, and the third going into the Christmas, holiday season itself too. So it has to be able to prove itself in this, this time frame here, or it'll be, very hard for them to really return. So that one there has, I guess if you would see out of any of them for as a price point, that's the best upside value. I don't know where it's at today to be exact, so before I say that, but again, it's dirt cheap, and you can play it, play it very tight, in terms of what you're willing to risk for the asset. Again, it's been holding this, $1.20 level for, ever since it spiked up and hit that $1.40 something level. And that's not bad. Again, you're talking about the market as a whole today. The market is getting, pummeled. Sears obviously 5 cents is a lot of money when it comes to Sears. I get it. But again, assets have been trying to hold its own, in the midst of this whole overall market selling off. So that's one I would definitely watch. Sears is another story because they're fighting the most to stay alive. That, any of the retail stocks obviously kind of left for dead. Again, same scenario, dirt cheap. Liquidating a lot of its assets, kind of like how GE is doing. So again, if I had to choose between JCPenney or Sears, I would definitely be looking into JCPenney's, only because they got a little bit a little extra a little extra fresh air underneath their wings, based on the CEO, things of that nature. Excuse me. All right, so that's one I would definitely be looking at, and under those two. You said Kohl's and Macy's. Macy's, we know the situation with Macy's. Again, they had earnings. They actually didn't do too bad, but again, the market punished them, and that's what happens when you come in kind of in line or right near the expectations. They're supposed to blowing numbers away in a very conservative market at this juncture. The market is very conservative. People are very skittish about where they're pumping their assets or their money into, especially if they got cash assets that they want to go into, as opposed to using margin-based accounts. But again, it rebounded a little bit. Today is not really a bad day. It actually gapped up and hit 33.76. Pulled back obviously because the market pressure was on it, and it's been kind of bull flagging a little bit here on the back end of the day. So again, that's one I would definitely keep an eye on, because again, although I know that the options market had been pricing in some very, very ugly puts, I think the $31 puts, the $30 puts, leading into December or whatever, I would definitely keep an eye on that as well. But I think it's the strongest out of the others so far thus far. Kohl's is another scenario too. Kohl's also been showing that it's been resilient in this retail market kind of sell off. Again, a lot of people shop at Kohl's. Again, it's down today $1.37. Again, the overall market is down though, so can't really base today, on average to what the stock normally would be doing in fair weather conditions. With that also being said, though, it does again proves also to be a scenario where you still want to watch the retail sector, because of the fact that a lot of them were kind of restructuring to get ready for their biggest cyclical season value, and that being the holiday gauntlet between, obviously Halloween, Thanksgiving, then this Christmas holiday, and obviously factoring in the New Year too. People also spend money for New Year's too. All right, so that's why typically on that Q3 numbers value on the back of a market that's just been tearing it up to the upside on fire, you're having that moment where people having downturn or a downturn value of earnings on their Q3 reports, because of the fact that they're trying to restructure. They picked up some acquisitions maybe over the springtime, this, that, and the third. CEOs coming in, going out. Typically the time of year when that kind of stuff is happening too. And again, a lot of the books, book value may be a little light, and it doesn't help to be in a down market too. And you come out with some decent numbers to the fact where at least your shareholders think they're decent, and you still get punished by the market because no one stays like, well, nah, that's not good enough. I don't want to, buy a premium for a stock when I can get it for a lot cheaper if the market keeps selling off, which brings pressure on these stocks. So it's something to think about in that regard. But again, a good stock to look, or excuse me, a good ETF to look at for as retail is the XRT, right? It's called the XRT. It's pretty much an ETF for most of the big weighted, retail-based stocks out there. So it's like buying a collection of all of them in one, basically, in that regard. So you want to look at the XRT as a good indicator to kind of get an understanding of what the retail sector is doing as a whole. Now, again, these are some good moments in time where these stores are going to get a good jolt of energy, right? Good fresh capital coming in when people buying these items up on these holidays, Cyber Monday, Black Friday, this, that, and the third, online values, this, that, and the third. Again, it's going to be a good jolt that these companies will definitely benefit from. But again, with that also being said, you need to go back and look at their their previous filings, their Q2 reportings, any kind of guidance value that it was all, operating under going into the last, fiscal, last quarter of this fiscal, right? So if they were still guiding in pretty high, or is at least in line, then that's still, positive, in essence, to them being able to kind of benefit from shoppers coming in and buying products out of their stores, right? So again, that's also a good thing as well to kind of measure it by a fundamental scope metric, so to speak. By natural observation. Again, you always can go and see if people are shopping at these stores. That's always the easiest. But again, just some different little data points and reference points to kind of keep in mind when you're starting to study the retail sector, right? And again, I shorted obviously a lot of big names last week in the earnings because again, I knew there was a lot of sell side pressure. Some of that guidance was already kind of factoring in a little lower because this is the restructuring period, so to speak, in a lot of ways to get prepared for the holiday season. Obviously, Williams-Sonoma, WSM, that was a big short. I shorted Nordstrom, JWN, that was a big short. Even nibbled off a little bit of Macy's, right? After the day, though, I didn't take it actually enter earnings like I normally would do on that one, but I shorted it, after the fact. Outside of that, again, I pretty much got my game plan on JCPenney. I told everybody what I was going to do with that one ahead of time, and I did just that. I bought the calls, the $1 calls, the stock, sold off throughout 105, bounced. News came out that, again, everybody excited about the new CEO, like I figured would probably be a good energy catalyst for it, and the stock took off to the upside. So I ended up, making some money off that one, so that was very, a very strategic lotto play, but either way, we made profit off of it. There goes JD, guys. There goes JD. There you go. Keep selling off. That news about the CEO stepping down just hit the press, guys, no more than about 45 minutes ago. And people are starting to see that news now on JD. So definitely you want to watch JD if you're short bias. I knew that was going to happen one way or the other sooner or later. I'm surprised it happened today. One of the main factors why I also, again, shorted this stock into its earnings and bought the puts and whatever and got my position, my short position kind of ready to go on the naked side. Again, those things are never pretty, and it's never substantial to be able to deal with that kind of pressure in this climate now where a lot of the women are taking it to these male CEOs at these companies for sexual harassment, the Me Too movement, feminism. It's like, don't even waste your time. It's like they got your kahunas in a vice grip. Don't even waste your time, brothers. So all the fellas out there, make sure you mind your manners. Don't be dog whistling to these sisters no more. And women out there, it's just not worth it, especially on the job. Don't do it. Especially if you got a wife at home, and even if you're being nice, a lot of people are using these moments to kind of capitalize too. Again, I get it. It's both ways. And no disrespect to the ladies, but there's moments when that stuff happens too. But either way, protect yourself. Don't be out here willy-nilly and putting yourself in adverse conditions based upon, these sexual harassment policies that they're getting, ramped up more now because women are definitely going after men now for these positions. Right. And a lot of it is men's fault because, again, a lot of men want to let these women get into some of these corporate positions, that and third. And, then they use them as, kind of trophy pieces to be around the office. All kind of stuff happens. Y'all know what it's like. Let's keep it 100. Now the women are like, okay, payback, payback. So another scenario, again, just to be very cautious about, how you conduct yourself. You should always conduct yourself with some integrity and dignity anyway, regardless. But again, we know what happens on these jobs, right? We would be silly to think that, especially if you guys got wives, girlfriends, or daughters, you'd be silly to think that people are not, making advances on your spouses. We know this to be true. And sometimes it comes from higher ups, and that's what's sad about it, because again, people don't know the boundaries and limitations. They think their power as being the kind of, head man in charge gives them that kind of, quote unquote privilege to act like that. And before you know it, they're on their way out the door with a nice severance package. Of course, that's what's sad. They always get to walk out with a lot of money still. But again, it's just tragic how they do that, and the double standards as well. Again, we have to go in that conversation, a la Bill Cosby, a la Harvey Weinstein, this, that, and the third. So again, y'all just deal with the climate. We speak the truth over here. We don't butter, we don't put butter on bread over here. We just eat it raw. But that's it. So just touching on that. Yeah, market still looks weak here. SPY just hit the VWAP, just hit the VWAP here, which we knew was going to be a VWAP rejection there. Oh no, I cut the volume down over there. No wonder. And we'll be blazing high.
We got from suppliers last week, including Momentum. The problem here, lower than expected demand, says the journal, and the decision to offer a wide variety.
That's why I showed the Apple in the earnings. That wasn't hard to figure out that they was going to be slow on those Apple iPhone production, sales, especially in China. Did all this stuff happening in China?
So it's hard to extrapolate trends from just a few data points, but investors clearly spooked. Apple is now on track for its worst month since September 2008. So how do bulls respond? RBC saying over the weekend that this sell-off is overdone, in their opinion, and that Apple has other levers to pull, like improving gross margins, buybacks, and services. On that point, remember that Google pays Apple to be the default search engine on its platform, money that flows right to services. Now, Cook told Axios...
Come on, JD, break this 21.
...that money despite its potential privacy concerns.
Yes.
One, I think their search engine is the best, and that's very important. But two, look at what we've done with the controls that we built in. And so we have private web browsing, right? We have an intelligent tracker prevention.
And you have a very beat up and downtrodden stock right now as well, Tim Cook.
We are going to cut Apple a check for about $9 billion. Will, back to you.
Josh, thank you very much for that. So with Apple losing some 20% since its highs back on October the 3rd, how should investors approach the stock? Joining us now to debate, Ben Dunbar, investment advisor from Gerber Kawasaki. And
1 second, guys.
Managing director at Multivariate. Very good afternoon to you both. Ben, let's start with you. This sell-off we've seen recently, overdone?
Completely overdone. I mean, it's just like clockwork. People start to get a little bearish on Apple with slow iPhone orders, but you got the higher price. They're going to have not a problem at all selling plenty of iPhones. And then, as mentioned in the RBC report, you got plenty of other products, accessories, services, not an issue at all. So we think this is an opportunity.
So you don't believe that there's going to be a slowdown in sales in iPhones, or you just think that they've now got other things to offset it?
They definitely have other things to offset it. We still think they're going to sell 200 million phones. And with Black Friday coming up, you got Apple now selling through Amazon. You have a lot of new channels and opportunities that they have. But then you tackle on all the other stuff. Between both of that should easily offset it.
That's short.
Max, do you agree with that, especially given the fact that the holiday season is just getting underway later this week?
No. So I don't think Apple trades on its fundamental ability to sell product. It trades with the sort of mystery bonus factor of being the luxury goods, the lifestyle.
So Urban Outfitters one to watch. Lowe's have earnings tomorrow. Man, a lot of money going to be made.
They made an unbelievable business off the iPhone. They kind of became, in that process, an iPhone company dragging a business around. 65+% of the revenue, more than 65% of the profit is those iPhones. I think Apple still makes a good product, but I think the basic sexiness of the smartphone has sort of reached its peak and started coming down the other side of the mountain. And we're seeing unit sales and shipments fall. I think we're seeing Apple acknowledge that in its own sort of preliminary way here by backing off of the units shipped numbers. I think we've seen them compensating for that for a while by pushing up the average sale price, or ASP, and I think my colleagues correct to point that out. And while I think they may eventually be able to build in enough offsetting revenue, I don't think they're historically anomalously high, near 40% margins. And their
Lowe's got earnings. Man,
that was always the question. Apple rolls cycles, if you know its 20-year history, and we're at the end of the cycle. They can have the big margins and the big market share. They're going to have to choose like everybody else, and that takes a little bit of the bloom off the rose of what's still a great company, by the way.
Well, you have this
ecosystem. 1 second, Ben. Clearly, Max, all of tech has been selling off since its highs. How does Apple's valuation stack up against some of those other big names that have sold off? Is Apple still more attractive than a couple of the more growthy names?
Yeah, sure. So for a growth company, it still pays a dividend, which is both culturally and historically a bit anomalous for the group. They also have a pretty low PE. They're at a 15.5 handle right now. It's a good place to park your money historically. But Apple and all the tech companies are about believing that the future...
Yeah, you got to wait for that thing to sell off some more. And wait till it finds a clear bottom and bounce.
Investment in politics is about trying to double
I know you want a dollar cost average in.
And that takes a little bit of the bloom off.
Yeah, but I would definitely be waiting until
Apple along for that ride.
This.
Ben, quickly, last word.
Yeah.
I disagree. People are still buying iPhones. That's a trend that's not changing. No one's making the switch, especially older people. Maybe it's a little bit longer of a refresh cycle, but at the end of the day, people are locked in on that ecosystem, and it's not going to change. And services and accessories will help drive up what they're kind of missing out on, a little bit slower iPhone sales.
Love a good bull bear debate. Gentlemen, thank you for bringing us that. Ben Dunbar and Max Wolf. Well, with 25, just over 35, minutes before the bell, the Dow is off the lows of the session, but still down 342 points, or 1.3%. The S&P is down also 1.3%, and the NASDAQ composite, which is the big laggard today, thanks to all those tech stocks selling off, is down 2.5%. Still ahead, we're all over this big sell-off on Wall Street. We're going to check in on the biggest individual movers as they head into the close, and we'll speak with a pair of top stock pickers about where they're finding opportunities.
Plus, the chairman of auto giant Nissan has been placed under arrest in Japan. The latest on the story that could have a big impact on the broader auto industry. We're back in a couple of minutes. Don't go anywhere.
No worries. No worries. Okay, let's do it this way then. Since yay. Let's do it this way then. Going to be a very There you go, Adobe. There you go, Adobe. Turn back over. Knew it was going to happen sooner or later. Yes, that's what I'm talking about. That's what I'm talking about. Roll over. Stop playing games. Just need to have JD close below. JD needs to close below that $21 handle. That would be like outstanding. Beyond outstanding.
Welcome back to the closing bell. 33 minutes left of the trade. We're down 354 points on the Dow. The low was 512. That's 1.4% for the Dow. Also for the S&P and NASDAQ, down 2.6%. Tech is the worst performing sector on the S&P today. Let's check in on some individual market movers. E-commerce website JD.com reporting an earnings beat and revenue miss this morning. Also guided below street estimates for the fourth quarter, citing slower sales in core e-commerce businesses. The stock is down sharply, some 8.3%. We should say that, of course, year over year, they still saw some 17% growth in sales. It's just behind the relative consensus estimate. Down 8% today. Year to date, down 46%. Alibaba down just 13%. Amazon still up 30% despite the pullback. Just highlighting that the kind of travails for the sort of smaller challenger in China, losing a bit of market share and down sharply this year.
Yeah, and again, it throws into question just how much are we seeing economic growth in China begin to slow down? Is that playing out with some of these big cap tech names in China? And up until recently, you did see that divergence in terms of big cap tech here in the U.S. continuing to move higher. Their Chinese peers were moving lower, and now we're starting to see the U.S. stocks come down, I guess, and sort of trade a little more in line with China too.
Yeah.
So that's just an interesting relationship to watch.
Yeah, and as Mike Santoli's been pointing out the last week or two, the Shanghai index itself has come off its lows in the last 2 weeks when the US has still been selling off. And that's, I guess, highlighted by the fact that Alibaba's only down 12% year to date, but JD's down a lot more.
All right, well, I'm watching shares of General Electric today, another stock that is lower. I know, shocker. Company announcing a separation of its power division into two units.
General Electric need to keep selling off. Keep talking about it. Yes.
GE Gas Power and GE
Talk
Power
it up.
portfolio. But today it announced the leadership appointments tied to that restructuring. Retired executive John Rice is going to serve as chairman of that beleaguered gas power business. He's coming back out of retirement after retiring last year. And of course, this move coming on the heels of the Wall Street Journal report over the weekend that the company actually had, basically did an investigation into some of the companies in Iraq that it does business with because there's been some corruption.
Yeah, I'm just waiting for it to sell off. Eventually, it has to sell off. I do believe it's going to test that low $7 handle at some point.
And then we also got UBS.
It just seems inevitable.
That is doubling down on its buy rating and expects that GE can cut debt, and that there could be 60% upside in the stock, which I think is probably the reason it's not down more right now.
Struggles to catch a break, this stock at the moment.
Yeah,
possibly.
It's down 55% year to date.
And like any kind of time frame, even sort of 1 month or whatever, it still looks pretty negative. But as you say,
right, doesn't mean it's going to be saved because of that either.
Time now for a CNBC News update.
Don't pump it up. Let it fall.
Hello, Morgan High Wealth. Here's what's happening at this hour.
Go to work.
New video of a Texas police officer appearing in court after being arrested in connection to a double murder in New York.
Wow.
Investigators believe Officer Bron Bolar, along with three others, were involved in the shooting deaths of Joshua Niles and Amber Washburn. His bail has been set at $250,000. Atlanta's airport setting a new record. The most guns confiscated at security checkpoints.
Wow, that sounds about right.
293 firearms have been confiscated so far this year at Hartsfield-Jackson International Airport, topping last year's 12-month total. Pop star Taylor Swift is signing a new global recording agreement with Universal Music Group. Terms of the deal were not announced, but in a Tumblr post, Swift said she will now own her master recordings going forward. And the President and the First Lady welcomed the 2018 White House Christmas tree a bit earlier today. The Fraser fir stands 19.5 feet tall and hails from Newland, North Carolina. Fun fact for you, White House Christmas trees must be at least 18.5 feet tall in order to be selected.
Wow,
the holidays are here.
That rule?
I don't know who made that up. It might have something to do with the ceiling height in the blue room. That's where it's going to be. It's going to be in the blue room.
I love it. Nice big Christmas tree. As you say, gets us feeling festive. Sue, thank you very much.
You got it. See you next hour.
We've got 28 minutes left of trade. We are lower, but off the session lows. Currently down 384 points on the Dow. We were down over 500 at one point, about 1.5% for the down the S&P. The Nasdaq continues to be the laggard, down over 2%. Let's look at the biggest movers of the day. Seema Modi is here on the floor. Bertha Coombs is at the Nasdaq. Seema, let's start with you.
Wilford, we have made some progress here in the last 25 minutes. We are off the lows, Dow down about 380 points. And if we take a look at the biggest percentage losers, you'll see that it's Boeing, 3M, Caterpillar, United Technologies. So certainly a trade-driven market sell-off. Names that have been able to buck the downward trend, though, in today's market, value income-generating names, Johnson & Johnson, Verizon, and even Coca-Cola, which is close to hitting a new all-time high. Taking a step back and looking at the sector snapshot, tech still the worst performing sector, though utilities and real estate holding up relatively well. Home builders are also up in the face of that weaker home builder sentiment data, thanks to rates ticking lower. Back to this rotation, though, out of momentum. We're seeing tech lower, chips are down, and a lot of that has to do with what we're seeing in the cryptocurrency space. Bitcoin, with today's losses, is down about 61%. in 2019. Guys, back to you. 2018, excuse me.
Seema, thank you. Let's send it down up. Let's send it
together.
uptown to Bertha Coombs now, the NASDAQ. Hey, Bertha.
Well, down we are here at NASDAQ, and Apple, although just slightly off of the lows, continuing to be the biggest drag here today. And the biggest drag month to date, right now responsible for about a third of the losses in the NASDAQ 100 this month. It's a little bit of a change in terms of that leadership to the downside. Apple in bear market territory now, joining the rest of the FANG gang that has moved there with watching Alphabet today has been hovering right around bear market.
Yeah, hey,
joining Amazon.
Hey, Vu Win, yeah. I'm also in NEO as well. I actually have NEO long. I have that position long. Been adding to it down in the let me cut this down a little bit. In the high sixes, I was adding it to NEO back then. I've been actually trading long NEO for a minute now. I would say going on close to about maybe what, a couple months maybe, somewhere around there, give or take. And I kept adding, add a little bit around the 690s area. Low sevens, I added into that position. Again, I think that's going to be a good disruptor, in terms of Tesla scenario, in terms of the Asian market, which is the biggest, populous market out there, and has the biggest need for electric vehicles. NEO being already in that region has the opportunity to really capitalize on that entire market. And on top of that, their price point value is a lot cheaper than that of the Teslas. And they're very grounded in the technology value in terms of the innovations. So they are, trying to cater to the, every potential, customer that they can, reach. Because again, everyone don't have that kind of capital, in rural area China or Asia as a whole as they would, be in certain parts of America. Right. So again, you can't price them that high, even though it's still a very fledgling market, until it really picks up. But I think NEO is going to be a really awesome stock. And I do have that stock long-term investment until it proves me different. And I know the Asian market's still getting punished right now too. It's down well over 30-40%. At some point when the Asian market turns, or when they ever get a tariff or trade war deal on the table, and we can finally get a breath of fresh air, say, okay, with these are the standards, we can start formulating our trades or whatever the case behind that. I think NEO would be obviously a great opportunity to kind of ride that wave in that, because it's only going to continually grow. It's only going to continually grow, if you ask me. That's just my opinion. I am very bullish on NEO. I shorted it a lot before. Now I'm actually going long. I did exactly based what Andrew Left did with Citron Research, big, well-known short seller. But for me, I was in it, I think, a little earlier before he got in. Obviously, he just got in and started speaking about it actually today. So I've been very bullish on NEO for a little minute here. But that, again, that's just where I'm at, or let's say where I get my hair done at. Hey, brother Adrian T, what's going on, family? Say, when you take a position on the earning plays, do you take a position a day before earning? Yeah, most of them I do. And again, you talk about front loading the position, very risky, right? And it can either go in your favor, or it can necessarily won't. But based upon the research, the due diligence, all the things that you would typically do when you're taking a stock, but now you got to factor in a bigger scope value, a 3-month window, right? And you got to factor in the next, the potential 3-month window after that, in terms of guidance values, where the asset is sitting, PE ratios, and again, investor sentiment, mergers and acquisition, M&A values, market sector scenario, overall market sentiment. We've been seeing that happening of late. Stocks are still putting out somewhat decent numbers, and the market's still punishing them in the earnings. So again, if you slightly beat or come in like close to in line, you're getting punished in most cases. Not all times, but it's been happening more than often, right? So with these earning plays that I take a lot, I'm front loading. I'm trusting a lot of my research, capability to put me in the right place. And again, in the admin that I'm right, I've been very fortunate of late. I can say that. Because my win ratio turn to earning play is very high. I know I at least got an over 80-something percentile win rate. It probably not near the low 90s. But again, I don't, I'm very selective on which ones I do take. And every now and then I will do a lotto type earnings play. again, JCPenney was that play. It was just at the bottom where I was like, man, this thing has to, reverse. A new CEO, again, going into the holiday season. This may be the break they need. Sears closing down a lot of stores, consolidating a lot of their customer base. Going to probably go to JCPenney's. It was just a lot of natural observation before I even dug into the fundamentals, which we knew was going to be trashy. Again, you talk about the stock that's just, dang near negative earning per share, dang near. And all that, it has lost thus far in market cap value and a mountain of debt, just like GE, right? So I was already, very, cognizant of that, so to speak, and it just made for a great opportunity for that one. In that case, it was just a very, very low, cheap bottom play. But ultimately, again, I am doing a lot of research. Sometime a week ahead of earnings. I've done some scenarios like a couple weeks ahead of earnings. Research values in them, and then just watch it all the way up until that 1 week window. See if the analysts change their predictions or or downgrade, upgrade, lower the any price point values in that I need to be kind of concerned about or reticent, of, or if they upgrade it, which is always a good thing for a stock. If you get an analyst upgrade going into your earnings, meaning they change the price point up the end because again they see some other telltale sign that says, hey, these guys gonna do pretty well. They've been really pumping out some pumping some numbers, right? So again, there's a lot of little things that we watch. Again, when it comes to doing earnings, you have to be very, very again thorough in terms of your due diligence. Again, you don't want to just throw capital out there without having some kind of confidence behind it, only because again, you can find that one lotto play every now and then, you can get lucky, but you don't want to risk your capital like that. You come out better waiting the next day after and just play the daily, the intraday Momo off that particular stock. If it be up or it be down or whatever, you may not get as much as the move if you bought it a day ahead of time or 2 days or whatever. But it also saves you from having an IV burn too, right? And the Greeks don't tear you up in some of these cases with implied volatility, fizzling out on you or something like that. All right. So again, it's a lot of different factors, and that's if you're trading options, whatever. But it's a lot of different little factors, that go into that mixture of finding a good little asset to play. Again, implied volatility and option interest are your best friends when you want to trade options, because you need to make sure that this thing has enough interest in it to a degree where you may get a good movement out of that asset. Especially if you're doing out of the money calls or out of the money puts, excuse me. Now, if you're doing in the money, at the money, or deep in the money, whatever value, then obviously you're gonna pay a little bit more premium for that asset. But again, being that you get in that higher, high end, if it definitely goes the direction that you're planning it for, that's a nice paycheck. That's a nice paycheck, right? So there's a lot of factors that goes into it. And, I guess I should say that. So again, I'm just excited to, put myself in a position where, again, trusting myself, trusting the process, and allow, the chips to fall as they may, because the market is always right. No ifs, buts about that. No matter how much research you do, the market is always right. Right. Even though when we know it's obviously wrong and manipulated, right? So do you post somewhere and share your earning plays with others? Yeah, in the Discord room. Typically, I'm all the Discord rooms I'm in. Sometimes, I may not get around to all of them, but I'll go post or tell people on stocks, whatever, some of the stocks that I'm trading in the earnings. Again, I did that with JD. JD, I was very adamant and vocal about I'm shorting JD in the earnings. Buying the puts in the earnings. And again, we see where the stock is at today. Not only did it hit my strike price and went beyond it, but again, now we got more sell side activity based upon the news of the CEO, which I was really also banking on that being a catalyst value to kind of hurt the stock, and it did. Turns out, on the earnings call, when I listened to earnings calls this AM, they asked, one person tried to press him on the rape allegation. He kind of tried to brush it off, but in that moment, when the press release get behind it, they're gonna start saying, well, hey, why didn't they press him on that? That stuff can affect the stock. Again, that's part of the company, is his name, his value. And lo and behold, he stepped aside, roughly around about 2 o'clock, somewhere around there, 2 o'clock. A little after 2 o'clock, he made a official press release that he was stepping down from the CEO role in the wake of these rape allegations. that sent the stock really turning over. You know what I'm saying? Turning over hand over fist. That thing would just start, it just started rolling over like crazy. And now we're here getting ready to test the $21, resistance to the downside. We break through that. Natural hold dollar marks or natural resistance points. We know that to the downside. Also to the upside, if you're going long, it can get real ugly. Right? If you go look at the 52-week chart on JD right now, this thing is getting back close to its IPO price. It could potentially get back down at $20. It breaks, if it ever gets to the 21 and get down to that 20, which I feel like it's definitely going, it can get real ugly. All right, so the puts I have in this trade right now are just up magnificently. I mean, they're up like nicely. big trade here for me. Big trade. So I sold a couple, and I'm gonna keep the rest of them in there. I have a nice little amount of them, not a whole lot, but I got a nice little amount. I'm gonna let the rest run. There's no need, and expirations are for the end of the week anyway, which we know we only have Monday to Wednesday, and then we have a half a day Friday. And for you guys that don't know, the market is, it's a half day Friday, so don't have hopes of, if you got puts out there or calls, option trades, make sure you cover off your position because the market closes at 1 o'clock Friday. I will be, reiterating that and, giving people heads up on that if they don't know. Try to do my part to help out. But the market is closing down early on Friday, right? So again, we already know, no market won't be open Thursday, whatever. So you have to go hard, Monday through Wednesday, and then expect to have a half a day Friday, even if you decide to trade. Just be, reticent of that, so you don't, have any option plays out there that may expire on you. And then they say, well, hey, you gonna buy these shares? But I think not. Y'all can have that bag, unfortunately. Unless you just really like the stock. But yeah, so that's pretty much about it a little bit, Adrian. Again, there's a lot of little things. I try to, again, get around and, post it, my thoughts or my ideas into a lot of these different Discord rooms. Again, Stock Twits or Twitter. Again, just sharing my little vantage point of viewpoints of what I see. Still up to the person to make that decision. Again, I can't. There you go. There go JD. There you go, JD. Yes. Broke that $21 handle. With some strength, dropped like 7 points in one move. Very nice, very nice. The market is turning over now. The SPY is starting to dump a little bit here. Exactly what I want to see here. Adobe turned back over again. LB is turning back over. Right. This is what I was talking about here. This is exactly what I was waiting on. Couldn't ask for a more better scenario. Again, sell side activity is picking up in NVIDIA. I still have some shares short in NVIDIA. From its earnings, now that's shorted in the earning. That was a big home run trade for me, short in NVIDIA. Again, just I enjoy trend trading, swing trading. Y'all know I do. I do a little bit of all of it, but really gotten really good at doing my trend trade. So I necessarily don't have to fight the market as much trying to intraday trade. A lot of this crazy volatility, I front load and let the stock move as it may. And if it stops me out or forces me out, then so be it. But other than that, I'm not going to fight this market if I don't have to. That way I can, really, really benefit from being able to ID some key factors in the market, patterns, trends, this, that, and the third, basically, to give me a great vantage point. Then there goes GE. There goes GE. Again, I bought some more puts in GE. I bought the 750 puts out there, covering up some of the $8 puts I had. It was up there near 70.93. I bought some more 750 puts for that one, and they're starting to pay off right now. It's like crazy, But again, you gotta love this market. You have to love this market. The sheer opportunities that comes along with this stuff is just awesome, So again, excited for that. Very excited. So yeah, so what Discord room you in as well, Adrian? I think we should be all in the same Discord room. Most of you guys, we're in the same Discord rooms here and there. If not, maybe Twitter or Stock Twits. But I'll try to get a little bit more, become a little bit more fluid in posting some of the trades I typically will trade, take in the earnings. Definitely my earning plays, because some of them I'm very vocal with anyway. But Where we at on time? Okay, about 11 minutes before the bell, guys. 11 minutes before the bell. Checking my position here. Some of them definitely gonna take some profit in. Let's see here. Since I got stopped out of that position. All right, so we'll take. Let's take. All right, let me cut CNBC while I'm doing this.
That it remains intact and will continue. But there's been friction between the Japanese contingent, if you will, the Japanese half of that marriage and the French half of that marriage between Nissan and Renault. Carlos Ghosn has always been the glue that has held it together. If he's gone as chairman, do these two sides increasingly start to say, I'm not really crazy about you having a stake in me or me having a stake in you? There's some real questions there.
Okay, Phil, great stuff. Thanks very much, Phil LeBeau in Chicago.
We've got 10 minutes before the bell. The S&P is back down
10 minutes.
42 points
10
right
minutes.
now. The S&P is also down about 50 points, 1.8%.
10 minutes, that get fresh, you're on.
Down 3% right now.
When we come back, Facebook falling to new 52-week lows. We've got the latest on that when closing bells back.
Let's do it. Put the handle on that. This make it force us out of that trade because that's going to be important. So yeah, lows is already starting to pull back and sell off a little bit here until the close. I see a little bit that's also happening with Urban Outfitters as well as LB brands. So those are going to be very interesting to watch here until the close. Going to have earnings. Lowe's has earnings tomorrow. And the video trade is still looking real juicy right here. Should take some of this tier rate off too. Decisions. Definitely need to close off the Adobe trade. Check those. Check the options market. So let's close off the rest of that as well. All right, guys. 8 minutes before the bell, guys. 8 minutes before the bell. You guys got any positions out there that you're not swinging? Make sure you're comfortable if you are going to swing them, but yeah, make sure you're protected. And you don't get distracted and leave a position out there that you don't want to swing. Right? Wake up the next day and like, what happened? What happened? It must have been a nightmare. All right. All right, come on, JD. Roll back under this $21 handle. Stop playing around. Let's go. All right, so that's Adobe. And I want to swing some of that Adobe. I just got a feeling it may just I see that sell side pressure still on it. All right, let's take a little bit off and leave a little bit in there. That way. It already broke that $220 support level. Very, very telling and revealing, so to speak. Adobe still being one of those stocks that were just overly bloated still after all the other stocks been getting beat up. It was just a given for that one to roll over at some point. And lo and behold, here it is. All right, so that, I think I got most of those positions out the way that because I still want that. Oh yeah, that's what it was. GE. Take a little GE.
Closing bell with 7 minutes to go until the closing bell. We have stocks moving back towards their lows.
6 minutes before the bell, guys. 6 minutes before the bell.
1.8%. Back below 25K. 24,960. The S&P is also down about 1.9%. The Nasdaq Composite is down 3.2% right now. The losers on the Dow today. Boeing, Visa,
How much is that?
Apple,
oh, there's no wonder. Yeah.
among
So
others.
yeah, let's do that.
Facebook sticking to its lowest level since February 2017 as well. Julia Borson has more on what's driving the decline. Julia. Well, Morgan, Facebook shares losing nearly 6% today on accelerating negative
All right, guys, 5 minutes before the bell. 5 minutes before the bell.
The Wall Street Journal reported on CEO Mark Zuckerberg adopting a more aggressive style. And now the question shifts to how Facebook's litany of issues will impact its user base and its ad dollars. Brian Weezer of Pivotal reiterating his sell rating on the stock today and warning, quote, advertiser concerns about morality at Facebook are real. Post last week's New York Times article on the company, we don't see immediate financial impact, but other risks to the business are elevated on many fronts. And we've reached out to some of the biggest ad spenders on Facebook, such as Procter & Gamble, Unilever, AT&T, and Nestle, as well as ad agencies WPP, IPG, and Publicis. We haven't heard back from any of them on whether they're planning to pull ad dollars or not. Now, this comes just today as Instagram, considered a key driver of Facebook's growth, admitted that accounts have been using third-party apps to artificially grow their audience. Instagram today saying it's removing inauthentic likes, follows, and comments from accounts. Now, all of this comes amid growing calls for regulation. Apple CEO Tim Cook saying regulation is inevitable, and Facebook's former security chief Alex Stamos saying Congress needs to regulate online ads. Morgan, over to you. Julia, Instagram has continued to be sort of the crown jewel of Facebook, even as it's dealt with all these problems. The disclosures today, I guess how much of that is a risk to what has continued to be an area of strength for the company?
So yeah,
well, look, I think Instagram
understands that if they make sure that the follower counts and the likes are real and accurate, then they're going to have a much more powerful product for advertisers. So I think this is, again, one of these situations where Facebook understands it needs to clean up the platform and make it healthy and accurate and transparent for the long run. The question is just how many followers see their numbers drop off dramatically, and whether there's some sort of short-term pain there as they go for the long-term strategy. But it seems like they have no choice. They need to make sure that these numbers are accurate. Julia, thank you. Facebook shares down about 6% right now. Let's send it over to Wilf on the floor for the closing countdown. Hey, Wilf.
Morgan, thank you very much. And some of those tech names like Facebook, of course, dragging down the broader market. The NASDAQ is the laggard. The Dow was down 512 points to the low. It's down 430 as we stand. Kenny Polcari is with me here on the floor. Kenny, you're just saying to me you think we're going to close at the lows. We're off the lows at the moment.
Yeah, we're off the lows. We're not too far off the lows. I just feel like in the last minute and a half, they're going to push them lower. It is for sale in the belt at the moment. Pared down a little bit, but I think they're going to push them on the lows, and I think it needs to, because I think it still wants to test lower, and that would set us up for another test tomorrow.
Is it all tech that's weighing us down?
Yes, it is, and yes, it will, and I will be ready to capitalize.
If money's moving out of growth into value, that's why you see names like Procter & Gamble and Coca-Cola. They're actually doing better today because, they're not sexy growth names, but they are hardcore value Americana names, and so that's where you're seeing the transfer.
Talk me through the volumes today.
So listen, the volumes are low, right? What you want to see, we've only traded 540 million so far down here today. That's really a low volume day for a move like this. What you want to see on a down day, you want to see a flush, and the flush means you want to see more volume, right? To kind of shake the branches and flush up. That hasn't happened yet, which to me says there's another leg lower before that happens.
And this week with the holidays likely to be lower volumes, so could we see more big down days?
You could, and the volumes are going to be Wednesday for sure, and Friday for sure there'll be no volume, but today and tomorrow are the days, right? So you absolutely could see an exaggerated move on low volume.
Kenny, it's always a pleasure. Thank you very much.
Totally ready for those.
Over 2 minutes left off trade. The Dow is down 420 points, and we sort of held there for the last 10 minutes. Looks like we're going to test those lows, which is 512 points on the Dow. As Kenny mentioned, but we will keep an eye on that. S&P 500 intraday for you. The chart there, you can see red pretty much throughout the day. Well, very much throughout the day, and we are near the lows, but we're just holding ground. The low of the day, of course, about an hour and a half ago. Let's look at all four of the indices. Just to sum it up for you, down 1.8% on the S&P, about the same amount in percentage.
I did all that research for a reason.
On the Dow, very much the NASDAQ that weighs overall down 3.1%. If we look at the S&P sectors, see that play out as well. Tech right there at the bottom. Communication services near the bottom. Consumer discretionary having another tough time, down 2.8%. That was the worst performing sector last week. Utilities, real estate holding on to the green just about, but certainly no significant moves to the upside.
All right, guys, this is about it, guys. The bell is
year to date for the bond market to show you what that's
All right, guys. 15 seconds before the bell, guys. 15 seconds before the bell. Get it in or go home, as they say, right? It's do or die. As they say, it is do or die.
Markets would have been much worse had rates moved higher. Those rate-sensitive sectors.
There it is, guys. There it is.
That rotation out of technology.
Back away from your pewters. Call in the guards, whoever you got to call. Stocks are already starting to. What's this about? What's over here getting? Oh, so yeah, they got earnings tonight. NUAN. So again, gonna be interesting watching some of these stocks here. After hours here with these earning plays. Let me go into the NASDAQ chart.
Countries like India and net oil importer.
This is my scanner here. Obviously, black box stocks here.
Just going to bring it back to the broader market. Down 400.
There we go.
So we're not.
Billy has earnings tomorrow again, so very interesting here watching. Looking to see how these stocks going to perform here after hours. Lows start to gap up a little bit going into the close. That maybe and this thing is like way off. I forgot, yeah, they were saying that it was lagging today. Lagging really bad. All right, so Tivix down, these after hours. So far, nobody obviously dropped their numbers quite yet. You don't see anything surging over here on the loss side or down at the gain side quite yet. All right, we'll see. We shall see, as they say. Either get right or go home.
CNBC senior markets commentator. Here's how we're finishing the day on Wall Street as stocks settle.
Wow, look at this thing. It kind of sold off into the close. Doesn't necessarily mean that it's going to mean anything when you drop your numbers, but
that's after being down as much as 512 points earlier.
That is it, guys.
The S&P ending down 45 points, 2690, 1.7% drop.
Well, yeah, and then also market sentiment been really heavy on the sell side, brother Marcelo, because of again, the market as a whole is getting pummeled. People taking profit, going to the holidays. A lot of it is premium selling. Taking some profit around the top price value, even though Walmart did pretty decent, okay, in the earnings. Hold on, let me cut this thing down. So. Super loud. All right, so after house again, we got LB, we have Urban Outfitters, another again, more retail. L Brand is a store that obviously, or the company that owns Victoria's Secret. Pink Brand, also a part of Victoria's Secret. They own what the company called? Something like that. Something like that. One of the little stores, little specialty stores. But either way, they got earnings after hours. Again, Intuit has earnings after hours. Intuit, the payment system, processing system, whatever, merchant service, they have earnings. Urban Outfitters, Jack in the Box, again, Jack in the Box, restaurant, kind of like Red Robin, I guess, and a few others. If you want, guys, you can look in my description box. I do have all the stock that has earnings this after hours, and also tomorrow before the bell. Yeah, but Marcel, yeah, Marcel family, yeah, that Walmart was a great short today. If you bought the puts, you definitely was a big winner, and you was able to definitely catch the naked short itself. Again, phenomenal trade today. Phenomenal trade today on that one as well. So again, just very interesting, moment in being able to kind of catch some of these little stocks that are pulling back and selling off a little bit here. All right, so again, just made it for a really, really great opportunity to get ahead of the game, get some sell side momentum behind them, and then just watch them kind of roll over. All right, so again, I do have a couple plays I had swung in the earnings, and we'll see what happens. Well, not earnings. Well, I had a couple earning plays too, but again, a couple stocks I swung just the next day, like JD was one of them, and then I also have a little bit in the video left over. Obviously, that being a really, really good stock. All right, they go into it, moving a little bit. Let's move a little bit to the upside. They must have dropped their numbers, and they did. All right, so revenue was 102 billion versus 910 billion, so they beat on revenue at least. Outlook looked beat. Just earnings per share was 85 versus 77. So nice. So yeah, they look pretty good. Into it. They did pretty well. Good. All right, so they're moving.
This is a classic de-risk day.
All right, let's see what the rest is looking like there. So we know we got one earnings beat today. Into it. I hope they can hold their gains because tomorrow may punish them in this old crazy market. You can be up one moment and down the next. Up one moment and down the next.
They're rolling over.
Very stingy market.
The hard thing right now is
very stingy market. All right, PSTG gapping up. All right, what's that all about?
And it hasn't been that way since 2008. So
all right,
it's
so
usually a classic. You buy on the dips kind of.
We have LB. Let's see if PSTG dropped their numbers yet. They did actually. Yep. Wow, look at those people. Wow. Look at those. Wow, look at them people buying up the file curve precursors. Blah, blah, blah. Now it's third quarter. Blah 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 blah. Excuse me, guys. I'm trying to see what the numbers look like.
It's old tech. It's rich tech. It's cheap tech.
All right, so man, nice, very nice. Cash flow equivalency 3.
But what you're seeing is just that
nice.
The stuff that's held up better.
Nice PSTG. All right, see there you go. So another one beat on earnings. PSTG. I was just talking about that. I did my research on that one all weekend. I had that one picked to beat earnings, and here it is. It's gapping up. So interesting. We'll see if it holds though, because it can definitely easily turn around in the same breath. All right, so it can easily turn around the same way. So we'll see what happens.
So the question is, does that mean that recognition
right,
point
so,
is that when we've mostly had most of the damage done, or is it just a realization that this is the market?
All right, so
we saw this tech rollover really sort of start when rates started rising, and rates are actually coming off again today.
All right, so Urban Outfitters beat again. That was a big beat for them.
Continue, but the problem is the tech earnings.
Even though a lot of people were very nervous about that one. But definitely beat thus far, and let's see how they treat it going forward. So Intuit's gapping up. Urban Outfitters, excuse me, just pretty much went back to where it was its closing value. Oh, excuse me, its sell-off value. We'll see if it spikes up and goes higher, or if they fight it and try to bring it down. As of now, it's definitely moving up to the upside.
Question on rates. I mean, Rick saying at the top of the show, he thinks the 10-year has peaked in any sort of medium-term perspective. But what the?
Oh, that's very nice, Marcel. You say you invest through through the company itself. Okay, nice. Nice stock option plan. Nice. There you go.
What seemed to get
yeah. General Motors again, same way. Just, car industry value. They're trying to still make sense of that whole industry. In terms of just being able to kind of stay afloat at this point. Again, so another one definitely to put on your radar for us, due diligence research on it. Just the sector as a whole. When I say, not just the stock, but the sector as a whole, the automobile industry. Obviously, the biggest news today was the whole issue with the Nissan CEO. He, again, stepping down on some, fraudulent stuff he was doing. Obviously doesn't affect GM, but again, these here today, going tomorrow kind of scenario with some of these companies. They definitely are a hot mess.
Couple of weeks for the stock.
All right, so we got one there, well, two of them. So Intuit beat. We have what's the name gapping up as well. PSTG. I picked that one to definitely beat earnings, and it's gapping up. Excited about that. Urban Outfitters act like it wants to roll back over here. I don't know what's up with that. But it's definitely acting like it want to, go the opposite direction.
There was just a sense of inevitability.
They might want to sell this thing off. Numbers may not have been as good as they wanted it to. We'll see. It might rebound. But we know Intuit is definitely gapping up still. And then PSTG definitely, heading to the upside. Man, here come Urban Outfitters. Let's see if they're serious about this thing. They may just sell it off. They may just sell this thing off. People saying, well, I'll take the spike, take the profit. And the rest, we'll leave the rest for the short sellers. Wow. Let's see here. This thing could probably get real ugly here on this one. Let's see if they're serious about it.
Not great to begin with. And then, of course, you have this lack of visibility now that everybody wants to pile on. But this thing has a free cash flow yield of 7%.
Keep moving, PSTG. PSTG still pumped to the upside.
Revenue stream. So, yeah, I'm biased because I own it, but I do think people will come back to this because I don't think the valuation is extended at all by any means. The only problem is it's still up 10% year to date, so I think maybe you see it come down a little bit. Oh, certainly, I will be buying more, for sure.
And let's talk through that change in how they're going to report the sort of sales numbers. Because
all right, so there goes.
It's coming about time
so far.
Lowering their sales estimates as well.
Yeah.
Stretch it out maybe a little bit.
Behind that move, and do you think it takes a quarter
into it, gapping up?
Quarters, or it's something
I know you're not gonna let this thing pull our way back now. That'd be interesting.
There's no doubt that unit sales are slow, right? I mean, that's not a surprise by any means. It has been slowing for quite some time. They've been able to offset that with higher ASPs, right? But this quarter, you have this lack of visibility, and you have this new reporting structure. And I think it's because they want to be viewed as a holistic consumer.
And PSTG squeezing up.
And they have to get away from this grind of unit sales and that sort of thing. I know it's disappointing for some analysts, but I still believe that services, wearables, even iPhones are still solid. It gets you maybe a high single-digit earnings growth, maybe low double-digit earnings growth, and you're not paying that much for it with a bundle of cash, and they're buying back their stock. So I understand the bear side, I really do, but I think that let this thing settle, and I think people will come back to it because it is quality, to Mike's point.
We have an earnings alert. It's on Urban Outfitters, and Courtney Reagan has the numbers for us. Hi, Courtney.
I will. So Urban Outfitters turning in a strong third quarter with earnings coming in at 70 cents a share. Analysts were looking for 62 cents on stronger than expected revenues, 974 million. That beats consensus of 968 million. Also, company-wide comparable sales were up 8%. The street had been looking for about 7.6%, so that's a beat too. By brand, it looks like Free People was the strongest. Those comps were up 12%, though that was slightly below what the street had been looking for. And the comment from the CEO, nothing about forward looking into the fourth quarter, but he does say that all brands, channels, categories, and geographies delivered positive comps for the third quarter. The shares are up by more than 4.5%.
They stopped doing the guidance because they figure out the guidance gets your stock beat down.
What do you think? Is this another reflection, or
people are afraid to give guidance these days?
The state of the consumer, state of the younger consumers, and the fact that Urban seems like they still have a hold on it. 8% comps is pretty good, but the stock was trashed going into the numbers, right, the last couple of months. So obviously relief is the reaction to that.
They've done a really good job with their products, right? They've done a really nice job. And I think that's why they're able to do such nice comps, because they're delivering what people want. And they've really changed and turned the corner there. I'd be interested to see about margins because we've been waiting to see some expansion. I would expect about 100 basis points of gross margin expansion. Hopefully they did that. But I think, to Mike's point, the stock's down 27% from its highs. Very low expectations.
Before we move on to the home builders, just to round off the tech discussion, Apple just by 9 basis points avoided going into bear market territory at the close today. But Alphabet...
it feels like a bear market.
Yeah.
I mean, it doesn't matter.
Alphabet joined Netflix and Facebook. So, I mean, all of them sharply down as a group. I know you don't like the
no, I don't. I think their market and individual stock doesn't make a lot of sense.
No, but it's still an indicator, 20%.
Absolutely.
Down from the top.
Okay, so home builder sentiment plunging this month to its lowest level since August 2016. This on rising mortgage rates, home price growth. Despite the weak data, home building stocks held up relatively well amid today's sell-off. You can see right there, Pulte Group, KB, Lennar, Toll Brothers, all up at least 1% per name there. I mean, how should we read
it's a couple of ways you can
value
read
hunting?
this. A couple of ways you can read it. One is you want to see a beaten up group not go down on bad news. The home builder sentiment was one of the metrics that sort of was stubbornly hanging in there, even as you saw existing home sales, new home sales go down and the stocks go down. On the other hand, Steph mentioned today was a de-risking day. What do you do when hedge funds de-risk? You buy back your shorts and you sell the stuff you've owned a lot of. So it's hard to extrapolate from one day, but maybe the stocks themselves are maybe closer to getting sold out for the short term.
Short-term reprieve only, Stephanie?
I think it's telling you that rates have peaked. I think it's telling you that macro is about to get better for the home builders, and that you're going to see rates come down, and these stocks have been beaten up.
Is rates peaking because we're going into the end of a late cycle good for the home builders? there are other factors underlying that.
There are, but these stocks have been hammered because of higher rates, right? So if any data point gets better on the housing front, I quite frankly don't believe it's all demand related in terms of the disappointment. I actually think it is supply. There's not the right supply for the people that are buying. And yeah, sure, it's gotten more expensive for a mortgage. I understand that. But I think there is enough underlying pent-up demand, especially from the millennials. So I think if you get a pullback in rates, I think that you will see a better balance of supply demand, and I think these stocks are just ridiculously cheap. I mean, I don't own any of them, but I'm looking at them, and I own Stanley Black & Decker, and that one I've been buying.
Mike, could these take a pickup next year, even if we come into worse economic growth?
Yeah, I mean, obviously you can't be heading into recession and owning these stocks necessarily, but they've obviously so underperformed by a vast amount. If it really what we're talking about is a step down in growth next year, when unemployment remains low, the consumer remains in decent shape, and the Fed is not as aggressive, I think that's the kind of environment where these stocks can sort of retrace to the upside a little bit.
Okie doke. Stephanie's going to stick with us, continue the discussion coming up in the next couple of blocks. Up next, we'll discuss whether another big sell-off on Wall Street is creating some can't-miss bargains in the market. A pair of top stock pickers are straight ahead.
And later, we'll hear from one Facebook shareholder who says Mark Zuckerberg needs to own up to the social media giant's scandals and to bring in new leadership. We've got more coming up on the show. Stay tuned.
What the market is. All right. LB spiking up over there. They dropped. Oh, they didn't drop any numbers yet. Somebody just manipulating the market. Went up on what? 400 shares. Yeah, that's typical. Market makers manipulating the stock. Doing what they do best. Great game. Interesting to see if they're gonna what's gonna happen to GE tomorrow. That one is going to be very interesting. See what GE is gonna do tomorrow. Grab me some soup.
Welcome back. Trade concerns and big tech turmoil dragging the market down again today, with the Dow finishing down nearly 400 points. Another concern weighing on the market, though, corporate debt. Mike Santoli's got more over here at the Telestrator. Mike.
Yeah, Morgan. So this has been this background concern that seems to have come to the foreground in recent weeks. Here is a very long-term chart of corporate debt compared to GDP. Now, this is basically telling you that we're at about 45% of GDP. Where are these other peaks? Scary. Right before recessions in the early 90s, 2000, and 2007. So that's the backdrop, I think, for why people are concerned. Just an awful lot of corporate debt got piled on balance sheets, over the course of this cycle.
Hey, what's going on, Felon Ransom Bell? You say, what program is this? What do you mean by what program? You mean in the brokerage account or the TV box is open? What are you talking about, Brother Ransom Bell?
Going up. That means that investors are demanding a higher yield.
Would you buy Apple shares? Again, what you want to do, Brother Rakim, in terms of investing, again, a lot of it is, in terms of, taking trades, not taking trades, this, that, and the third, or buying certain stocks that you're familiar with. It's still also, you want to be a little bit more familiar with the asset as a whole beyond just the name brand. So if you look at Apple over the past, I don't know if you're familiar what, value level or where you're at in terms of, you're investing, what you know about the market, what you don't know, whatever. But from a chart perspective, if you go back and look at where the stock has come from over this last quarterly report earnings, obviously in the wake that it sold off, I actually shorted into Apple earnings. Right now still a little volatile. It sold off, a good little amount today, obviously down to 185 now. And there's still a lot of so-called implied weakness into that particular sector, the tech sector. But was also kind of damning a little bit about Apple as well. If you go, you can just go Google it actually too. It'll pull up that, the CEO, Tim Cook, was saying that, he was thinking that the actual amount of iPhone sales were going to be at was going to decline over the holiday season. All right, they're already projecting that they're going to have a decline in iPhone sales. Right, so one of the main staple products that they offer over there, Apple, is in terms of what it does for the revenue for us, the bottom line is potentially going to come in a little lighter than expected. Going into the next potential earnings report, because they're kind of overly leveraged at this point. And Apple's problem pretty much at this point is the fact that they're sitting on a hoard of cash, and they're not necessarily making any kind of M&A values with that money, mergers or acquisitions, stuff like that. They just got a lot of money sitting on hand, but not necessarily a lot of other side byproducts or innovative values that they maybe want to get into to grow that extra free cash flow that's just sitting around on the books, like an Amazon would be doing, the same way like a Google would be doing, stuff like that. So it's coming back to hurt them a little bit. They were just solely relying on Apple TV, Apple iTunes, and then the iPhones really to be the major staples of how they're bringing in the revenue or bringing in the bread, so to speak. And it seems to me that it has backfired. And because of that, the stock took a major tumble. So again, you always want to be thorough in doing your research on any stock or any asset before you take the trade in it. It's imperative, right? Right. And it's good to get some advice here and there, but you always want to go with, what's sits well in your in your mind, what makes you feel comfortable at night if you're going to put your money into a company or asset, based upon some certain criteria or metrics. Well, let it make sure that it resonates with you more than just we know it has to be a name brand, and that's fine too. But again, that's why I always stress that due diligence is like that's king in the investment world. Even though that still can also come up short at times, but at least you have a confident value, or you have more confidence when you go to take a trade, knowing that you put in a lot of work, to be privy to feel comfortable about taking the stock. And again, if you definitely want to get some more inside information, definitely link up with some of us in these Discord rooms. Hook up with us. We do that through the Dagger Squad as well. We have a Facebook investment group that we spun off from an investment workshop that was I do through through the Dagger Squad. We could definitely add you in there, so you can kind of feed off some of the other brothers in there, or the sisters in there, whomever, that are definitely serious about this market. And I also do offer a mentoring program. I'm pretty sure you guys have been you've seen lately. I've definitely hooked up with We Trade HQ. The brothers over there at Bradley and Jacob and Kiko them. So I do personal mentoring. So again, small little price to pay for a little bit of my time and really unpack some of the information for you. So again, you looking at it from a position of, whether you consider it to be education or this, that, and the third. I think anybody and everybody that's trying to come into the market value, even with that, what you have, it's good to have good mentorship around you. Now, you can easily do this stuff on your own. I'm gonna be the first one to tell you can do it. However, if you really, want to, shorten your learning curve, get straight to the meat and potatoes, again, link up with someone that has a good mentoring program. You know, be it me or anybody else, it doesn't matter. But I actually do have a service too as well, and it's dirt cheap. You know, it's pretty much dirt cheap. About breaks down to $1 a day. You know, and the person will blow that again on a bag of potato chips. You know what I'm saying? $2 or $3 on a bag of potato chips, and that could have been you know, went towards some good education or at least some good knowledge value. So again, people just have to outweigh, you know, put their, you know, their you know, the value of what they really want in some cases, or to learn in some cases, you know, ahead of, you know, again, a value meal at McDonald's, right, or whatever. But again, that's just, you know, something to think about as well. But you definitely welcome to being a part of the be a part of the Facebook Messenger group we have as well. And you know, the family in there is very, you know, approachable. They'll help wherever they can. Really some good, really some good people in there. You know, so again, I'm always going to make sure I try to look out for people. I always do that anyway. I'm always dropping off stocks, you know, dropping off a little help here and there if I can. I'm only one person though. You know, if there was more of me, it'd be a lot easier. But with that also being said, I try to still help and be very, you know, selfless in my approach to sharing this information. Right. So again, it's just really good karma too. It's really good karma as well. Pay it forward kind of reality. Right. Pay it forward. You know, but yeah, man. So it's exciting just watching these stocks again. Yeah, just do a little research on Apple. You know, see where it's at right now. Again, it's at a very, you know, crucial point now. It broke that 190 handle finally. Basically broke $190. Coming off a high one is up there around 230. You know, going into its earning, but we see the whole tech sector again as a whole has just been getting pummeled. You know, it's been getting pummeled. Yeah, I trade a lot of those stocks, Marcel. Yeah, I'm very familiar a little bit about the retail space. Again, a lot of those ETFs in the retail sector, just retail-based stocks alone, like Zillow, KBH Home, Lennar, Redfin. I mean, there's so many of them. Again, even the retail sector, and they also have retail. Not retail, real estate, the real estate ETFs that you also could trade, which is a conglomerate of all these other little smaller retail-based kind of companies that you also can trade, you know, itself. Right? You can trade the entire ETF, and that's not necessarily have to deal with the actual, you know, retail-based stocks themselves individually, and then benefit from that. But right now, the retail sector is getting pummeled right now too. Big sell-off is happening in the retail sector based upon the housing market slowing down. Also, that has something to do with what the federal tax, you know, tax rate hikes of late to kind of, you know, stun a lot of this kind of market buying in that sector, right? A lot of, you know, pretty much a lot of people ain't buying houses right now, and a lot of other smaller players that feed into that or building houses right now, like Home Depot, they just got beat up real bad in their earnings, right? That a major part of their home, you know, industrial-based goods that are coming out of the building homes are not being bought. Right? It's not a ton of construction happening, so therefore you don't have a lot of, you know, money on the books on that bottom line. Now, interesting enough, Lowe's has earnings tomorrow. Now we know Home Depot seems to be a little bit more stronger and better than Lowe's on average, and you know, interesting enough, you know, it's going to be weird to see how they're going to, you know, what the numbers going to be when they release their numbers tomorrow, during the pre-market tomorrow actually. Right? So I'm very, very curious to see how that's going to turn out with them. And I'm saying that because actually Lowe's, excuse me, not Lowe's, but Home Depot guided lower into their Q4 earnings numbers. Right? They're pretty much projecting that they're going to have a lower revenue value going into their next fiscal earnings report, based upon them knowing that the housing market is slow, beginning to go into the winter months as well. So a cyclical value of that store being kind of hurt by that in terms of that value, the housing sector. But again, people still go to Home Depot for other stuff. Power tools, weekend warriors, this, that, and the third. But a major part of the lumber, the big box things that, you know, people use to go into houses when they're building houses, a lot of those items are not being bought right now. So again, natural observation. You always want to be able to be, you know, you know, intuitive, you know, use your intuitive wit to kind of, you know, think of how you would be, or how you would look at the world, or as the global market as a whole, excuse me, from a consumer perspective, but also from a CEO perspective too, right? Foot traffic, you know, marketing and advertisement, you know, again, you cut on your TV, you know, who commercials are you seeing more than others? So things like that. Conversations about people talking about their particular companies or this, that, and the third, whatever the case. But natural observation is a very, very, you know, rudimentary sign of good fundamental analysis, right? And that's important. You know, fundamental analysis is not necessarily overly scholarly technical as most people think it to be. Again, there's some intricacy to it. And like I always tell people, you don't have to have, you know, MBA, PhD, you know, BA, AA, whatever, a certification, nothing to learn how to trade the stock market. You know, and the greatest thing about it, again, none of us own it. It's everybody's, you know. So a person can't feel like they're the only one that's holding the power that can keep you from it. All right. So again, so somebody just got unhalted. Let's see what's going on. Oh, some nuance. So they had earnings today too. They just dropped their numbers, I'm guessing, and it just got unhalted. So we'll see if this thing gonna gap up or gap down. We'll see right now in real time. They had earnings this afternoon as well. This company NUAN, Nuance Communications Incorporated. All right. The stock was halted to drop their numbers, and there goes L Brands. L Brands just released their numbers, and it is selling off. I don't know if it's going to hold or whatever the case, but it is dumping. There it goes, guys. Wow. Let's see. Let's see what the number look like. Again, L Brands is the company that owns Victoria's Secret, so this might just be prematurely. Let's see if they beat. If they didn't, then, you know, it's going to keep selling off. But if not, it's going to reverse and go higher. All right, so let's see. 16 cents. So I think the street was looking for a little. What was the street looking for on that? 16. So they had a loss of 42.8 million. Oh, okay. Whoa. All right. Now I don't know that number could be baked into it though. So again, it's too soon to say. It could be baked into it. All right. Some of this stuff was already projected. They was going, you know, miss this or miss that or this, that, and the third. So you never get excited too soon. So what they was expecting? I think they was expecting about what, was it 12, 15, 16 cents a share, if I'm not mistaken. L Brands Q3. So yeah, they beat by 1 penny, and sales came in. It's a little bit right near in line, but they also had a 42.8, and I think that has to do with the so adjustment of $1.9240 versus $1.99. And that's coming off the back of what? The Q4 guidance. Okay, so they're guiding in a little. Well, they opened up the guidance. So they went from 190 to 240 versus the 199. All right, so they might have been guiding in a little higher here going into the Q4, but I don't know exactly what was the previous one. So I have to go do the research on that, figure out where exactly was the actual guidance coming into that. All right, but as of now, the asset is definitely a little volatile here. Hadn't really settled yet. But either way, interesting. Hey, what's going on, Eva? Monica, the beautiful Monica in the house, guys. Definitely go subscribe to the sister page. Make sure you tune into the Dagger Squad channel every Tuesday for an in-depth class on financial literacy at the utmost highest regard and esteemed value. Again, happy to have my sister in the building. Comrade in power and arms when it comes to financial literacy. So good to see you. Back from a beautiful trip she took down to the islands over the weekend. So good to have you. Well, not necessarily good to have you back, because again, anytime you can stay out there and enjoy life, I think that's power. All right, that's powerful. But definitely good to see you in the back chat, sis. Yeah. So again, just interesting watching this market here. You know, the SPY is still trying to hold up a little bit here after hours, after having a very, very, very rough day. Again, just watching here after I was saying the movement value is going to be with some of these stocks here. All right. So again, we got a few stocks that gave dropped their earnings report. This NUAN, whatever the name of this company is. NUAN, excuse me, Nuance. So actually they beat our earnings, so it's gapping up. It's gapping up a little bit. So they actually beat a little bit here. All right, so we'll see how that holds up here. They bought that business, did they see? If they not, but they're up here roughly, you know, a little bit here after hours. All right, so everybody waiting to see what this L Brands is going to do, because again, that one there was controversial because the CEO of L Brands is actually stepping down here. And that's never a good sign when the CEO leaves a company during their third quarter report as opposed to their last fiscal, right? It shows that either they're, you know, they either old and retire, or they kind of just leave it on a bad note, right? But again, L Brands is the parent company that owns Victoria's Secret, and also, you know, one of the other famous brands underneath Victoria's Secret is Pink. Their team, undergarment, customers, they've taken a big hit over lately. A lot of the teenagers are not buying Victoria's Secret basically at the end of the day, like they was before, right? They're going to other brands out there now, and they're competing against Victoria's Secret. They actually also own Bed Bath and Body Works as well, L Brands. So they own a few little stores in their little portfolio. So will be you can kind of go through and dig through their numbers and figure out what stores did what to add to the whole piece of the pie into their earnings report. But as of now, it ain't looking too good for the home team in terms of L Brand. But again, it's still it ain't really sold off. It ain't really gapped up yet. So we'll have to see. But that's just the latest news. But that is just the latest news on that particular stock, right? So again, who knew, right? So now y'all know. You can go tell your buddies if you didn't know. Yeah, man, L Brands, a company that owns Victoria's Secret, whatever the case. You learn a lot about these stocks and these companies when you start learning how to invest. Basically, all the little minutiae about these companies here and there. Very valuable information, basically. All right. So again, I'm excited about my PSTG trade. Excuse me. I've been tongue twisted a lot lately. I'm tired. That's what it is. All right. So yeah, that one. I'm happy with that one. I took that trade in earnest. And again, waiting to see how the rest of the market's gonna open up tomorrow. We have lows. Again, another one that's gonna have to really prove itself. Only because again, we saw what happened to Home Depot. Home Depot sold off. So L Brand cut their dividend from 60 cents to 30 cents. Wow, that ain't good. That ain't good. L Brand's name is John Mills, Victoria's Secret CEO. So, all right, so we got a new CEO change as well. And the guidance they lowered guidance. Oh, wow. Guidance for 245, 270 versus the 260, 280 versus 260. Oh, no, they raised it. They raised guidance. Cut dividend from $1.20 to versus 240. Annual dividend. So that's also a part of the quarterly dividend. So we know that's baked in there. They got numbers all over the place. Yeah, their numbers are all over the place. Sees 190 versus earnings per share 190, earnings per share 210. All right, so we'll see. Not overly bad, but not necessarily overly, darning good, because now the stock is sitting at a flat position, basically where it was trading at all day. Basically where it was sitting at. Raises 2018 view. So they raised their guidance in for the view to 260 earnings per share, adjusted 260 earnings per share at 280. Okay. All right. So again, forgive me, guys. I'm just reading the numbers. Again, this is what I do. So I'm over here reading through some data here, figuring out what their numbers are looking like. The small print stuff, basically. Yeah. So the stock is just basically flat at this point, right? Right back to where it was trading at on the intraday chart. Haven't necessarily made a definitive move up or down yet. I think people are still trying to process the numbers. Interesting enough, again, it just depends on, how they value. But as of now, again, the stock is just it's kind of stuck in a channel, stuck here in the channel here. All right, so we'll see how that turns out. So let me open up the CNBC here again. I'm gonna
acceleration of bad news, even in just the past couple of weeks, increasing exposés, especially about this issue of mismanagement. Thank you, Julia. Julia Boristan. Shares ending today down almost 6%. Joining us now to discuss what concerns over Facebook's leadership could mean for the company's future, Julie Goodridge, CEO and founder of North Star Asset Management, and Dryden Pence from Pence Wealth Management. Both Julie and Dryden are shareholders in the company. Good afternoon to you both. Dryden, I'll start with you. You own Dryden, you own $17 million worth of Facebook shares. Are you going to hang on
17 million.
here? Are you going to buy
Boy.
more, sell?
Boy, I know your P&L looking real bad. You own 17 million shares
We
of
actually
Facebook.
like the valuation at this level.
Unless you was in
And
real
we think
early.
This pullback is probably more of an opportunity, certainly to hold what we have. But
Yeah, I don't know if you're
think
gonna buy more.
take a look at opportunities to increase that as we go forward. We're positive on the stock.
Okay, that's good.
Julie, you think that some
So that means he was in a lot earlier.
could
He didn't take that
avoided some of
beating
these
way up there near the
issues,
top,
in
above
the past,
$200.
particularly at the board level?
Most of these hedge funders are in like that anyway.
I do
though.
indeed. I do indeed. We're in a very interesting position with Facebook. One of the things I would have asked them in terms of their advertising revenue is, how has their advertising revenue changed from political candidates? Because I always thought, as I've been doing my research, I kind of think, well, why in the world were they taking money for political candidate advertising? But basically, the problem here is that Mark Zuckerberg has 51% voting control over the company, and he does not own a majority of shares. And so virtually nothing can be done to change anything at Facebook without his buy-in. And one of the things we've been doing for the last 3 years is trying to get them to have a one vote per share model.
Oligarch,
and he's not going for that because he's got 10 times the voting
Mark Zuckerberg, who's not
What's
gonna allow.
interesting about that is that we've now got 81% of the one vote per share shareholders behind our resolution.
Not going to allow
to
investors
change the
to really
corporate
call the
governance
shots
structure.
over there. To
Dryden,
really,
would you be behind that resolution
do a change
as
of
well?
guard,
Do
so to
there need to
speak.
be changes?
He's gonna force that female out first, though. His
Leadership
the
at
right
Facebook.
hand
The important thing is for
before
us,
he gets out.
at any point, is this is a community of 2.3 billion people. They like to be liked on Facebook. And while we can talk about how advertisers might look, the advertisers go and they generate revenues from where the people are.
Information about
so
Verizon. He asked me about
change
Verizon,
in users,
Marcel.
I think we're still positive on the stock and the leadership in the company. They have problems, but they've shown a habit of trying to get through them over time. And so we're still positive on it. We're still positive on their leadership. We don't advocate any particular change. We want to see them continue to grow.
I'm not positive on Facebook leadership. Much as they say suspending my account over there at Facebook, I love shorting Facebook stock. That's how I get back at them. I go short their stock and post it on Facebook.
They've got it
I got shorted Facebook stock today. Made $2,000 to $3,000. Thank you, Mark Zuckerberg. They won't suspend that post, but they'll suspend me telling the truth about other stuff.
Understanding of what the implications of the kinds of stuff they've been doing would have on the value of the company. So in other words, they did not know that any of this stuff was going on, supposedly, and yet they made some really crazy decisions. And it's kind of like what's happening now is you've got them trying to crawl out of a hole that they've dug themselves into without actually examining how the heck the hole got there in the first place.
Okay,
well, I think that
so many ways or avenues out there you can use to help
is still a relatively young company.
Get information and data on these
they're really working.
We've been supporting them so many years.
Began to work forward.
Buying their products.
I think that we need to give
now when you become an investor or a trader, you get a chance to really, find out the nuts and bolts behind these companies.
Shown a history of being able to have
see their market price margins that they're doing and charging all the exorbitant amount of money for these little, cheap little plastic phones and
opportunity to work through.
This is a good little site right here that may help you out.
And see where they
not just for Verizon, but maybe a few more others as well.
When the board
17 million, that's a lot.
That's what I'm trying to understand.
But he was in. You could tell they were in at a lot earlier price. They were in at a lot earlier price too.
Thank you very much.
To what extent of the share price pullback is
there goes
these issues are going to make them lose?
Brand rolling over. Let's see if it's going to hold. I'm just happy that
I definitely think
TSCG holding up here so far.
Disengagement, the idea that advertisers are rethinking exactly how they utilize the platform, and then just
there go L Brands.
Right now in a mode of trying to.
It's about to get ugly. Break this resistance here. Break this resistance here. It's going to get ugly.
The massive break in the uptrend. I mean,
it's going to get ugly in L Brands.
$500 billion company that had a
and y'all can see exactly. I'm very,
and then it's
vocal about L Brands for a reason. Typically, when I'm that kind of vocal, you already know what the deal is. I mean, I just shorted it, or I went long into his earnings play. I basically played his earnings play. But I did take it short in the earnings. I shorted L Brands into his earnings.
price
about the
people take
puts,
that.
puts as well.
You do have a sense that people are bracing for something on that front, maybe some kind of.
So right now,
even if it's just an
my research paid off.
Certainly going to stay. And
so far, because it can easily reverse and go back up. But so far, my research has paid off, and the stock is selling off.
I mean, especially not knowing who might replace.
So the earning killer
We've been asking quite a number of people
strikes
on
again.
our air today, and it seems like mixed answers depending on who you talk to about that. Well, former Facebook director Donald Trump
and also LB.
Well, he's going to weigh in on the social media giant's controversy.
I do have a small loss on Urban Outfitters though. I also took that one though, so I missed on that one. But it was a small position. All right, let's gonna talk about L Brands.
Hi, Morgan. Remember, L Brands is the parent company of Victoria's Secret and Bath and Body Works, putting up adjusted earnings for the third quarter of 16 cents compared to analyst expectations of 15 cents, which was also what the company had guided earlier this month. The revenues for L Brands beat estimates, coming in at $2.77 billion. The street had been looking for $2.71 billion. The comps, as reported earlier this month, coming in up 4%. They are, however, having the annual dividend to $1.20 from $2.40. They're raising their full year earnings guidance to a range of $2.60 to $2.80. Analyst estimates are for $2.64. And they also have named a new CEO for the Victoria's Secret division. That will be John Mihas. He is currently the president of Tory Burch. Before that was the president and CEO of Club Monaco. We had
don't pump this stock, let it sell off.
About how Victoria's Secret CEO
sell off
after 2 years, and they have now named a new Victoria's
Secret. Enjoy
this
stuff, man. This stuff is fun. It's never fun to lose it, but I still find fun.
Has bounced around initially on this report, but down now more than 6%. Wilfred.
And it's gonna go lower.
Let me get this straight. The company just cut the dividend. Was this expected? Did the street expect that?
Not that I'm aware of. The company cut the dividend to $1.20 for an annual dividend from $2.40. We've talked a little bit about how the company has struggled with the Victoria's Secret division, and market share has fallen there. So they have a new CEO to come in and try to turn some things around. But remember, that's just one of the two big companies under the L Brands parent company.
I wouldn't say that, Morgan, that the dividend cut was expected, but it was a 7% dividend yield. So implicitly, when this market has a yield that high, at least you perceive a risk there. I think working against that is the idea that the founder, Leslie Wexner, owns a lot of the stock. And so there was some thinking that maybe it would not cut the dividend because of that.
Okay, Court, thanks very much for that. Down about 6 or 7% in the aftermarket, L Brands. Now the VIX surging nearly 11% today. And fast money trader Pete Nigerian joins us now to tell us how to trade the markets.
Come on, guys, let the stock sell off.
That move today? Is it
soon as CNBC pump that little news out there?
I tend to lean on that idea.
Start going back up. It was already on the way
three
down.
Different spikes this year in terms of the volatility index. We had it back in February. We had it again in April, and then obviously October. So
it's obvious
this
that
has been a prolonged move in volatility.
It's obvious that
we've had some pullbacks. So we've got down towards that 15
area.
But
Bath and Body Works.
Like
that little store stays full. It stays more busier than, to me, Victoria's Secret.
When you really
look at and I was looking through their numbers.
Trading relatively cheap right now, Will, because of the idea that a 16
Bed Bath, I don't keep on say Bed Bath Beyond, but Bath and Body Works, whatever it's called.
Well, if you look at
there's same store, there's comp sales were up over 13%. You know, so they had a 13% growth value basically in Bath and Body Works. I keep on saying Bed Bath and Beyond. Again, whatever. Y'all get my point. But they did phenomenally well going to this quarter here. And so again, a lot of people shop at that Bath and Body Works store, seemingly than you think. I mean, I always, when I go through these little stores, which I rarely do, the malls or whatever, Bath and Body Works is always full. And some of y'all brothers know what I'm talking about. You know, you gentlemen in here, y'all didn't went in there and bought your female spouse and some smell goods, this, that, the third. They also got men's stuff in there too. But that little store there stay with some customers in there. So again, a good way to kind of gauge a company's values through their foot traffic. Are they busy or are they not? Simple as that. So very, very interesting being able to kind of follow those kind of metrics just from natural observation, just strictly by natural observation. Right. So Just watching this stock here after hours move around a little bit here, trying to actually find itself a bottom or spike up. Either way, it's caught in a moment of purgatory here. It's very undecisive buyers in this stock right now. Do they want to sell off? Do they want to buy more? Again, that's that moment in the market where you're just, you have a lot of, uncertainty in terms of investors trying to make sense of everything that's happening. They got a dividend cut, new CEO coming in for the Victoria's Secret store. I mean, they restructuring. They just got all this stuff going on over there. And that's typically what happens when you have a main branch, the main parent company, managing all the other smaller little companies, and you're trying to get all their data out there to the, to the general public that invest in that one entity or that one stock. Kind of like an ETF in the sense for equity ETF, the amount of assets that they own in their portfolio. Somewhat like what GE is going through right now. They're having to liquidate a lot of their assets because they're overly leveraged and they're not making money. They're going deeper into debt, trying to hold up these dead assets that they bought and merged into these failing companies, the other failing companies, and it's dragging the entire company down as a whole, right? And they actually held on longer than they needed to, and because of that, they more and deeper into debt, and now they're just starting to have to be, they're forced to have to sell off some of their assets, right? So very, very tragic story in GE. Again, everybody on here probably knows about GE, probably got appliances through GE or just whatever. But GE is not the kind of store you probably thought it was, or the business you thought it was. They used to be a very, very well-known household name, not only just for their product base, but again, a lot of innovative technology they had through the other subsidiary companies. Now, there's too many other competitors out there. They can't necessarily compete. And again, legacy stock, old school stock is dying. I mean, GE is actually dying, for lack of better words. It's not the most favorable stock to be trading right now. And I've been making a good little amount of money off that stock, buying the option puts for dirt cheap, and just benefiting off of it. A lot of those puts and were basically really dirt cheap. It doesn't require a lot of money to get invested. At the end of the day, when you really understand the lay of the land and how to process the information, you'll be surprised the amount of money that you throw away on trivial stuff. You could be putting that money to work in the stock market. Simple as that. But it's hard for people to wrap their mind around doing something like that because they don't think long term. They got to have it right now. Self-gratification. Self-gratification is the disease for any kind of growth or stability, right? If you always got to have what you want right away and you can't trust knowledge, due diligence, research, then you will always kind of stay, basically stagnant, in value of growth. You have to be willing to take chances on yourself. In a sense, meaning, your level to be able to, level up your education. Again, not necessarily in school or college. You can do this stuff on your own free time. You can learn the market literally, in your free time. There's tons of YouTube videos. There's tons of free PDF books out there. There's tons of free, websites that you just click on, particular stock names, just that and third, and get a wealth of knowledge from. And the best thing being if you just got like a good mentor, someone can help you break this stuff down. Having that is priceless. So whatever the case, I want to see everybody excited about the market in some value, because again, this is where everybody's money's at around the world, literally. And I'm like, why aren't you getting a part of that, piece of that pie? Why aren't you getting a piece of that pie? You're 100% right, over myself, Dr. Boswell. Obviously, I'm an affiliate of the Black Business School. That's how I really got excited about the ability to, train and teach, because I was, one of those students as well over there, that often excelled, at levels that, even surpassed even probably Dr. Boyce Watkins in the essence of, investing value, like the way that I invest. Not to say he's, don't have the value of success, but again, taking raw data and information and applying it, having a passion to want to be successful at it, that's the secret sauce. If you don't have a passion or a drive to want to be thorough at it, then you're going to have behind it. You're never going to put all, the right amount of attention that's necessary for you to really get it, right? And you're talking about dealing with capital here. You're talking about investing in the market, a global market that's free for everybody, number one, It cannot discriminate against you for race, color, creed, sex, gender, orientation. Catfish, smurf, don't matter. Felonies, baby mothers, that stuff don't matter. That's what I love about it from that perspective, because again, it kind of eliminates people from feeling like they're, they don't have what it takes, or, from a screening process to be able to trade the market. Well, it does not run your credit. They don't care about none of that stuff matters. And you can get into the game a lot faster and accrue, a great value of profit and gain, better than what a bank could ever give you in a money market account, and a lot more than what the job could ever pay you for what your worth truly is. Right? They can never pay you what your worth really is anyway. Worth value is anyway. Right? So that's why I think, we got enough time to kind of, again, kick it and blow it on, blow time through trivia stuff. Again, no disrespect, you like sports, all that kind of stuff, you get wrapped up in that. If you got 2 or 3 hours to spend watching a sports game, you got at least 30 minutes an hour to invest in learning how to be educated on learning how to invest in the stock market. Simple as that. Right? Simple as that. Especially if you want to really get ahead, right? If you don't have, someone not going to gift you property or, leave you a bag, you got to go out there and get your own bag. Right? You got to figure out how to go out there and get your own bag. Right? Again, and the market gives us a great dynamic to be able to do that. Right? Great dynamic to be able to do that. So again, it's fun. It's exciting. Again, what's fun than making money, right? But you're doing it on your time, in your own comfort zone. Again, you can trade anywhere you want, as long as you got a Wi-Fi signal or a broadband connection. Right? That's what's also exciting. I've traded out on the kayak, a mile up a river stream. I've traded, in all kind of places, park everywhere, bowling alley. It doesn't matter. You can, as well, as long as that market open, there's opportunity there, you can get at it. Right? You can get at it. And again, that's exciting. That's super exciting. We're not geopolitically or geolocated, disabled. You can do it literally anywhere. Hey, appreciate that, brother Fisher G. Hey, thank you for stopping by as always. You already know it. Power and profit to you, man. I'm humbled. Always good to see my family in the house. And again, that's we always say we battle mates at the stock market thing. Right? We all battle mates. It's us against the market. It's definitely us against the market. Yeah, 100% right, brother Bryant. That's it. Self-gratification is a very bad trait. Right? Microwave society, 100%. I couldn't have said it any better. Again, the great thing about this, you don't, really have to go out and, spend exorbitant amounts of money to learn. You don't have to blow your knees and your back out to learn this. You're using the best muscle you got, besides your heart is your brain, to put data, into perspective and then make a financial decision based off that data. So the thing you're doing is reading and unpacking information, data chasing, basically. I'll call we're data chasers. That's all we do. We just chase data around all day long. Who dropping some news today? Who got that good data today? Right? Can it translate into some profit? Can it translate into some value of financial gain? And once you get into the fold of this thing, you guys see the kind of money these guys are making. Y'all see the kind of gains people put up in this industry. You ask yourself, like, man, why haven't I been acclimated to this thing? Why haven't I been serious about wanting to learn how to invest? Because again, it comes with a level of fear. Right? People always going to tell you what they're not willing to do because they have that fear. It doesn't necessarily have to do with you though. Right? And how you value financial literacy. Right? So again, you have to be your own boss at the end of the day. You have to be your own boss. Right? You have to make decisions that's going to benefit you and your family and your future. So in a sense, to not be kind of boxed into the natural status quo of life. Go work for somebody else to be successful. No, I don't want to punch nobody's clock. Especially for 20, 30 plus years, unless it's just something that I just definitely love to do. But in that mindset, I may well start, trust myself and go start my own business. It really isn't that hard as most people, make it out to be. It really isn't. But a lot of it, again, has to do with fear. It's just this inherent fear. People don't want to trust themselves because they kind of, know what their study habits and their work habits are like. But in my mind, it's more reason to want to learn how to be independent of self, independently successful. But I mean, that's just the way I think, I guess. But at some point, you just get tired of waiting on somebody else to be able to do things that you could possibly do yourself. Basically, learn how to monetize your time, or to be exact, learn how to monetize your intellect. That's a better way to put it. Right? You need to learn how to monetize your intellect. And when you learn how to monetize your intellect, right? Basically, your passion, so to speak, that old saying, when you learn how to get paid for your passions, you'll never work a day again in your life. That's a very true saying. Right? That's a very true saying. No one, really gets a kick out of getting up every day to go to work, to even ask, another grown person, and you grown, can you even take a restroom break or something like that? That is like the worst. I mean, we understand there's protocol and respecting that kind of stuff. I get it, but again, that should bother you as a person to say that I want to be comfortable doing this, for 20, 30 plus years, when I can obviously find a way to, be my own boss and, live life on my terms. But that's just my opinion, though. Again, these are all my, my opinions here. A lot of them are rooted in elementary fact value, but a person still have their own viewpoint, vantage point in life that they, live by, and that's fine. That's fine. But I'll be the first person to tell you why work hard when you can work smart. Stop working hard and start working smarter. Learn how to get ahead in the game, and get with other people that are doing the same thing. Learn from them. Invest put your money where your mouth is kind of mentality. I tell people, if you got money to bet another person on a football, basketball, or baseball game, sometimes the bets be like huge, $50, $100, $200. You got that same amount of money to invest in the stock market or into your education to learn how to invest in the stock market. A gift that keeps on giving. If a person can't see that, then obviously they're backwards hustling. They got it all wrong. And they try to shame you because you don't think like them. They definitely got the world all wrong. Exactly why you want to subscribe to the Decker Sword channel. Brother Garfield, Sister Monica, Sister Cheryl. Again, myself, any distinguished guest, anybody that comes on speaking about financial literacy, period, no matter where you go, you want to surround yourself around that kind of energy. You want to surround yourself around that kind of knowledge and expound, on it best you can, learn from it, and go out there, pay it forward to someone else, help somebody else. That's what it should be about. When one teaches to learn, simple as that. True fact. True saying. When one teaches to learn, and the more you stay in engaging mode where you're teaching or sharing something, the better you get at even your craft. Because again, repetition becomes repertoire. You're conditioning and grooming your mind to be able to be very effective at helping others because you don't want to let them down. More importantly, you don't want to let yourself down. Right? So you want to give people good quality information, something that they can benefit from. Again, that's just where I position myself and where I come from. I'm always want to help. I'm always in the help mode, so to speak. I'm always in that kind of in that kind of lane, or that having that kind of energy surrounding myself. I always want to help someone. To the point where, someone like, man, you don't really have a life. You always stuck in front of the computer, or you always studying something. You always looking at the market. This because I got goals. I have goals. I have peers that are, at millionaire status already. They've been trading about a year, 2, 3 months, year, 7 months, somewhere around there, near 2 years, and they already at millionaire status. Fired their boss, quit their job, and now they can go out there and hire their own boss, probably the old boss, probably. You ask yourself, what are they actually doing that I'm not able to do? Nothing, because we see the same charts every day. We see the same stuff every single day. So that's what I love about this. Again, there's no special interest value. We know there's insider trading that happens, but it doesn't negate the fact that you can do your own research and be just as profitable, depending upon, the position size that you're taking or the asset basically in the whole that you're trading. There's always money to be made. There's always money to be made in the stock market. Even in the day when people say, man, the market is ugly today. It's ugly to you because it ain't really fitting your comfort level. But you best believe somebody making some money. Somebody getting the bag. And if you know how to trade, all these different values and facets of the market based upon whatever it shows you, because you're not a myopic trader, you don't box yourself to one particular strategy, right, or window, then you'll find a way to make you a little money too, if you just need to, because you don't have to even trade. It's no law that you have to trade every day. Sometimes the best trade is the one that you don't take. Facts. Sometimes the best trade is the one that you didn't take. Because if you weren't confident enough to submit your capital towards it, then again, that's still a win-win situation. Because you necessarily didn't lose anything, regardless. But just one of many ways to think about it, Again, I like to use the common sense approach to trading. I like to use the common sense approach to mentoring, whatever, because I know it matters when you can break things down in layman terms, remove all the kind of extra sauce and the extra fugazi, hype behind this stuff, and just, hey, make it make sense, bro. Make it make sense, sis, because there's sisters out there that are trading the market, women out there trading the market who are phenomenal female traders, right? Phenomenal female traders. So again, it's not a sexist environment. It's not just dominated by men alone. I mean, I love it. I love it. And you can even teach children to do it. You can teach children to do this stuff. And you should want to teach your kids how to do this. Why wouldn't you? Right? Who wants their kids to be always concerned about video games and, asking you for something when they can learn how to go out there and, hustle through the investment value or through the stock market analysis and, building up their financial prowess to the point where they'll always find themselves in a position where they'll never have to need, because they know how to go to the stock market to get them a bag. They can take their allowance and invest it and come back and check that thing 3 months from now, 6 months from now, or a year from now, and they done bought everything they wanted for Christmas and with some extra, based upon them using the stock market to kind of get them some extra capital gain from that. That's when you're winning as a parent. Let that marinate. They're not coming to mom and dad asking for money. Or they get fired because everybody lost a little money. The market so lost. Now the analysts
don't achieve the units in the sector. We're not going to know also about the units that's going back down. I mean, that's the story. The fundamentals have kind of changed. These companies are very mature now, and they were trading at kind of some peak levels. Margin.
It was at premium prices.
This market environment in which you
10
have
times,
the slaughter of these tech giants, which had been market
12 times earnings and all that kind of stuff.
And then you have names like Coca-Cola trading at its highest level since its IPO back in 1919.
Well, it shows you that there's still a lot of money that needs to stay in the market and needs to find a place to go. McDonald's has been outperforming. Starbucks has been outperforming. These are companies
well, McDonald's
that
again.
Seem to be actually getting.
I've been talking about McDonald's for the longest. Ever since last year, McDonald's was still tearing up to the upside.
What's changed is
people gonna feel me on that McDonald's trade or investment, one way or the other.
That emerging markets really are starting to struggle, and this is where they're going to sell some of those lower price phones. It's a big deal. So I agree that the places to hide are becoming fewer and farther between. But I do think stocks below the surface have removed an enormous amount off of the valuations. And I still think some of the big industrial names, their businesses are not over. And I think actually they've really been priced almost too destructive.
And that was one of the other things that Mike Wilson talked about, is the fact that in the last year, you're down 18% from where the PEs were a year ago. So you're starting to see opportunities out there. And maybe that means that there are some names that can start to outperform that weren't before. I mean, how many years have we talked about Coke on this desk, or Pepsi, or some of these where they just haven't had a performance? J&J's and some of the pharma names have. J&J is another one of these names that's been very impressive on these down days. And they're not going there to hide, I don't think. I think there are different elements of what J&J and some of those are offering that gives them the opportunity for pricing power, right?
Could anyone on this desk sit here and say, yes, you should be hiding out in Coca-Cola?
You don't hide anywhere.
No, but what I'm saying is, it's like, no, but that's the only reason why these stocks are performing right now. They're considered staples. Look at like how McDonald's and Coke and some of this stuff is acting. I mean, to me, I don't think it makes a lot of sense when the market is now very focused on valuation of growth names, of companies that have just changed the world, and you want to go and buy sugar water stocks. It makes no sense at 22.
And shouldn't you think about the valuation of these quote-unquote value stocks or the defensive stocks? Some of them look a little stretched right now.
Well, quickly, I mean, unravel this. You mentioned pharma. Big cap pharma has been trading well. It has not been a place to hide. It's actually been a place to be. We've talked about that for a long time. Pfizer, since President Trump went after them in the spring, I think, when the stock was trading 37.5, it's basically been a straight line to the upside, moves we haven't seen in Pfizer in probably the last 10 years. Procter & Gamble, on the other hand, I don't know. I mean, I think people are racing to it for some perceived safety. But at 20 times forward earnings for Procter & Gamble, is that really where you want to be? I don't think so.
All right. Well, one name in the tech fallout, Facebook, it is on track for its worst month in more than 5 years. The stock continues to get nailed as reports of an internal, quote-unquote, war at the company dominate the headlines. Julia Borson's got more on that story. Julia. Melissa, Facebook losing nearly 6% today. After this weekend, the Wall Street Journal reported on CEO Mark Zuckerberg adopting a more aggressive style, saying with Facebook's at war, he's changing his approach. Now, today, questions shift to how Facebook's issues will impact its user base and its ad dollars. Brian Weiser at Pivotal reiterating a sell rating on the stock and warning, quote, advertiser concerns about morality at Facebook are real. Post last week's New York Times articles on the company, we don't see immediate financial impact, but other risks to the business are elevated on many fronts. But Facebook tells me that in the wake of last week's New York Times expose, since its third quarter earnings report, quote, we haven't seen any meaningful trends in advertisers pulling spend. But Facebook is still struggling with a range of challenges, including stagnating user growth. Daily active users in the US and Canada were flat between the second and third quarter, while in Europe, daily users declined by 1 million. The company's stock has plummeted some 39% since its Q2 earnings report. There's a growing expectation of federal privacy regulation, as well as the potential for antitrust scrutiny. And this all comes amid growing criticism of Zuckerberg and COO Sheryl Sandberg. And that slumping stock price has brought the value of Zuckerberg's holdings down by over $8 billion. As for whether we'll see any dramatic changes at the top of the company, that's entirely up to Zuckerberg, who controls the majority of voting shares. Melissa, back over to you. All right, Julia, thank you, Julia Borson in Los Angeles for us. If you thought Facebook had an engagement problem, which it does, core Facebook at least, and you thought it was able to fix the problem, maybe that fix is even harder to do if it's got handcuffs on it in terms of regulation.
And the amount of money and the growth in terms of paying people that are there for security reasons and everything else. And this stock really started that move to the downside on the announcement of how much money they were going to have to start
down
spending.
40% from its all-time.
Yeah, and that was near around the same time. I remember we were going through the earnings report, and then suddenly we see these huge numbers about what they're going to have to spend to grow. Now, we knew that they were going to be spending, but I don't think any of us on the desk thought it was going to be that kind of numbers. And when we saw that, that's when the slide really began to accelerate.
I think they told us in that second quarter number, not only that they didn't know how to price their business, that they didn't actually know the cost of security, but that effectively that they were not a community of sharing. I repeat this, that the perception of Facebook's business has changed so dramatically. And so therefore, the fix on Facebook, if it's a community of sharing, is just a few programmers, you actually do a couple things around the edges. No, this is actually fundamental. This actually tells you, they told you growth was falling down too, not just the cost out of their business. This is corporate governance.
That's why I'm gonna keep shorting Facebook. You keep suspending my account on the Fugazi suspensions. That's why I don't like Facebook. So I'm gonna short your stock. I get it. You may take me off there vocally, but I'm gonna short your stock and get it back financially.
Crazy not to extrapolate to what Google is going to have to deal with in 2000.
All these little ratchet companies.
Let
them come out, come sideways. Just short their stock. And a little weakness of controversy.
They're not the same company, though, Dan. I actually disagree with that. I think some of the corporate governance issues at Facebook are ones that really are a lack of oversight, a lack of visibility. Well, I mean, I think it's actually a case where these guys really weren't able to articulate the risks around the company. It's very hard for me to understand.
There wasn't an investor other than you online at CNBC.com in July, late July, when Facebook was trading at $217 before that report, who really thought that this was something that they're going to have to deal with in 2019. It was going to be the sort of hit to earnings that made earnings be flat year over year. After at one point, we're expected to be up 20% in 2019.
You done? Okay. Why would 30% growth in the top line for the last 3 years, in fact, arguably 35, was this stock trading at 16, 17, 18 times going into that number? You know why? The market was telling you. People were not rewarding this management team with a premium. The ultimate value for a company is the multiple you want to put on it. And we were not willing, even before the second quarter. Facebook underperformed the triple Qs going into that number, let alone after it. I would argue that this company has been broken for a long time and that the market would not reward it. And the market was right.
Is the company capable of fixing itself with the same two people in charge?
Well, I mean, it's interesting because I think Pete commented on this earlier today, but when you have Mark Benioff making comments that he did about Facebook, I mean, that's not necessarily a very encouraging thing for the share price. Now, I never thought it would get down to 130 or so. And at a certain point, you have to look at it and say, they will figure it out. But to answer your question, does there need to be a change at the top in terms of Mr. Zuckerberg? I don't know. Sheryl Sandberg. I don't know the answer to that, but we're closer to that than we've been in a long time.
I should say the analyst community is so far off sides on this stock too. If you think about where the overweights on this company, there's so much that needs to come down, and they will come down. They'll come down, you know, after
Facebook
the next
hit 130.
But the bottom line is these guys were banging the table. At
I remember I was shorting Facebook
and weren't picking up on
up there near the $200 level. I took it all the way down to like what, 170, 180, somewhere around there.
For Boeing, the stock inches away from
and now it's down to 131.
Is on its longest losing
the
streak
power of
since
investing.
2014, but could now be your best
or
chance
trading
to buy this industrial giant. Plus, check out shares of L Brands, a retailer getting slammed after hours. The chart masters see something brewing in the retail space that might have you running for cover. He'll explain. It's not all bad news out there. Guy down here says there's one energy stock, that is poised for a year-end rally. He's not, because he's going to tell you the name. He's just a fast bitch. Fly for Times Square in New York City. Much more fast money right after this.
Urban Outfitters squeezing up after hours and going higher. JD is turning back over to the downside. That's a good sign. For my remaining puts, I have in that short. That one's going to be brutal tomorrow. Man, if they open up round by, especially if it gap down, oh man, that'll be ugly. They're going to beat the brakes off that stock tomorrow. I am going to love it. I'm gonna see if they got the started their conference call. I'm pretty sure they have. Wow, look at the way the new one turned over and started selling off. That's why you never get excited. Give it a chance to kind of open up. It gapped up, went up above 1670 and pulled back. Now it's down to 1580. I know a few people that was very excited about taking this trade too long in the earnings, and right now they're not smiling. They're not feeling too well right now. They're probably feeling like, yeah. They're definitely not excited about where they are right now.
Only up 40 basis points to 16.5%, all as a result of the lower volume. While we did take significant actions to reduce costs in the Western hail markets, it was not enough to offset the.
And we have begun to wind down SRS and devices business units.
Yeah, y'all getting down right now.
$1.380 billion, which represents an increase of $15 million from our previously guided midpoint.
I like that because I went along with y'all in the earnings. Good job over there, management.
Welcome back to Fast Money. Boeing shares fraction today, closing down more than 4%. The stock now sitting on the verge of a bear market, down nearly 20% from its high last month. It is having its worst losing streak in 4 years, so on track for its worst quarter since 2011. So should this buy go in?
Well, I'll tell you what, I think it was a final trade for me last week. I don't own the stock, but the argument and the investment setup is very much the same as it was 6 months ago. So Dan talked about changing fundamentals. I don't think their fundamentals have changed. I think about 6% of their order book could be affected by China directly. I think otherwise there's a series of long-term orders that these guys have won. They just won the TX order book, another bonus. These guys continue to win. And again, who are they competing against? This is essentially a duopoly. It's they and Airbus, and who's really winning the war? It's absolutely Boeing. You're talking about $25 per share of free cash flow. It's been unbelievable. That story is alive and well, and I don't think is affected really at all by the trade war. So I actually like this week.
How about the MAX? How about the problem with the MAX?
Yeah, well, they definitely have headline risk right now, absolutely. And I think that's the big concern. And that's part of what I think is really pushing it down because to your point, I mean, they're throwing off cash like crazy. It's absolutely incredible. And now with this pullback we've seen in the stock, the PE is a lot more appetizing at 18 than it was in the 20s not too long ago. So I think there's a lot of reasons to look at this name. And when we start to see it turn, this is a name I'd be looking at.
I think you guys make a really good point, and it goes back to what we were just talking about before. No, I mean, listen, there's going to be some stocks that are thrown out, maybe with the backwater and just painted with the same brush. There's a lot of little metaphors there.
Almost too many. Yeah,
right. But the point
should
is,
be a limit.
if you're telling me that only 6% of their order book is affected by China, and this is a stock trading just above a market multiple and all that, that's a name that if it gets back to 300, that's where you start picking at something like that.
Go back to the quarter on October 24th. They reported their third quarter. They guided significantly higher for the remainder of the year. Their margins were 13.2%. The street was looking for 11.4%. So if Boeing was at all concerned, they could have guided more in line. They could have guided lower. They did not. Now, to your point, I agree. They should be somewhat insulated from this. However, the market is selling first, asking questions later.
Keep going higher, PSTG. Yes.
There's a level where this gets very interesting, but the longer this goes on, and I happen to think the trade dispute, war with skirmish, the longer it goes on, the worse it gets, and I think it's going to go on for a while.
Check out shares of Square getting crushed today, down more than 10%. The stock is doing something it hasn't done since it went public. We'll explain. I'm Melissa Lee. You're watching Fast Money on CNBC. First and business worldwide. In the meantime, here's what else is coming up on Fast.
Welcome to the jungle. It's worse there every day.
Yep, that's how investors have been feeling. And the chartmaster says he sees something that could mean it's about to get a lot worse than you think. He will explain. Plus, Kaya Dami is stepping up to the plate to tell us the one name he says will be a home run into year-end. He'll give us the fast pitch. That and much more on Fast Money right after this break.
Come on, L Brands, break this $33 handle. Let's get some sell side activity happening here. Man, what Urban doing? Oh, okay, just slightly correcting. Nothing major.
Welcome back to Fast Money. Shares of L Brands sinking in the after-hour session after reporting earnings. Let's get to Courtney Reagan at headquarters with all the details. Hey, Court.
Hi, Melissa. So some additional surprises from L Brands. You mentioned the stock is lower. The company cutting its annual dividend in half to $1.20. Before that, it had a 7% yield. The company says the new payout ratio is more consistent with its past, and it's going to use that $325 million to deleverage the balance sheet. Second, we knew Victoria's Secret CEO Jan Singer resigned after 2 years. L Brands today announced John Mihas will be the new CEO of that lingerie brand. He's currently president of Tory Burch. Third, L Brands upping its full year guidance to an adjusted 260 to 280. The street is at 264. Now, Morningstar analyst Jamie Katz, quote, didn't think the dividend cut would come this quickly, but says it's a prudent step for the board to take. Further, Katz says margin pressure remains significant, indicating either the product is failing to resonate or the pricing landscape remains competitive. Meantime, FBR B. Riley analyst Susan Anderson says the dividend cut was likely expected by a lot of investors, given they get to turn the performance around. Simeon Siegel at Instinet says L Brands is in the midst of figuring out their operational and financial turnaround. Investors will need to digest the implications of management and financial change, working to determine where revenues are going next. And then from Wedbush, Jen Redding also said that she likes the new CEO change, but it'll take 9 to 12 months for any real change to be made. So expect negative margin pressure in the meantime. Melissa?
All right, Court. Thanks, Courtney Reagan at headquarters. We've seen the biggest names in retail under pressure with only 36 days till Christmas.
Wow. Come on, Mel, stop.
And then you know what this week is?
It's Wednesday, it's hump day, and then gobble, gobble.
It's the best week of the whole entire
Black
holiday
Friday,
season
Cyber
right
Monday.
now.
Do you hate those terms too, guys? You hate almost everything about the holidays.
No, I love the holidays. I don't like when people, how was your gobble, gobble? Have a happy turkey. That makes me crazy. Nuts.
Smile on it. This is a happy week, man.
Yeah, best
We
week
should.
of the whole
Carter
year.
Worth, I bet you, has views on that.
You're in L Brands, right?
I'm not.
Oh, you're not?
I was trading from the option side. I've had small position on. I don't have a position on now. And just to be clear, I still like the company on this pullback. Remember, they went 45% off the lows in August up to the peak somewhere a couple of weeks ago. I pulled back 10%. I don't think Victoria's Secret is turned around overnight, but I do think that the core business is there. And I think this company has actually gone very cheap.
All right, well, we've already seen autos and housing get crushed. Our next guest says retail could be the next consumer space to fall. Chartmaster, Carter Worth.
That's right. Speak it up, Carter.
Well, so there's a lot of stocks holding out as the market has been collapsing. Big names, and last week they all got smoked, from Burlington to Ross Stores to TJX to Target, all down between 7 and 20%. And in principle, it's always the last man standing that finally gets it, and that process is underway if you think about it. What I wanted to look at is the sector first. At one point, look at this spread. So this is the actual sector, which of course has Home Depot and Amazon in it, versus the equal weight S&P 500 consumer spread. At one point, there was 1,400 basis points of spread, meaning the average stock, the median stock was not performing, but the sector looked so great because Home Depot, Amazon, and others were doing well. Now, of course, the selling has gotten around to those names. So while this is converged, ultimately this is likely to go negative, and I would expect the equal weight to get worse. A few charts, and then we can go on from there. This is a great ETF. It's broad, 90 plus names. It has everything from Walmart to Amazon, Costco, Kroger. It's got all the names like Tiffany and Ralph Lauren. And so XRT is the symbol. Here is the chart. And one thing that sort of is inescapable is that basically you have the double top formation. But here is also the issue. As this was performing, all of this ascent, it really was never making much progress this way.
There we go. Come on, L Brands.
Is it making you money, or in fact, as a proposition, it's opportunity cost that's really hurting you? Now, here's the more interesting thing. Take a look at this relative
there we go.
line.
Let's go, L Brands.
The top is XRT. The bottom is the relative performance, what's on top. You can put anything in there, versus the S&P. And what we know is
XRT ETF I was talking about, Brother Marcel.
XRT's relative performance
XRT retail
to this level is
ETF.
and it failed again and again and again. This is literally what algorithms are all about. And to my eye, there's plenty more to go. It's just not good.
Not good for retail stocks.
This is the sector itself. Again, actual weight. And it's hovering on the line. And I'm going to make the bet, right, that we're going to ultimately break the line. The way to figure that out is to not look at this, but look at the equal weight. Watch what's happened. Again, if we equal weight it, it's already happened, meaning without the influence of a few large cap, super cap performers, we've already broken trend. That's the bet for the sector overall. A stock pick or two, and let's call it quits. Here's Best Buy.
Best Buy has earnings coming up.
Coming up. It is on the line. It's on the line. It's on the line. It's on the line. And then, of course, it fails. Not good. It's likely what's coming for other stocks. Totally switch it up. Different name, Nike. Same circumstance, same principle. A well-defined up.
Nike.
Not because I say so. Your eyes are working. You can see what it's done. And what it's done is broken trend. Not a good setup. And then finally, if that's not a head and shoulders top, I don't know what it is. Not good. Something's wrong.
Come on over, Carter.
So all my Nike fans out there, now you see why I say McDonald's is a stronger investment than Nike. I was saying that ever since last year. McDonald's is a better trade investment than Nike.
Unwind of a long Amazon short.
Even though I think Nike still can rebound, but
was unraveled, and so that
again, there's a lot of key factors
lower in retail. So I'm wondering, did the charts play out that way, and what did the charts indicate about that trade going? I mean,
right. I mean, look,
is there any hope for Amazon?
So there's trading sort of matters. Can you make the dollar here for an overbought or oversold condition? Can you find something that's breaking or not breaking? And then there's structural issues. Sure, structurally, we know that Amazon has changed a lot of things, and it's probably going to keep on changing. Right now, it's only half the size of Walmart in terms of the business it does. But I think the important thing is this, that decay doesn't happen all at once. First, in the market or in consumer, you lose autos, or you lose housing, or we lost semis, or you lose banks. But eventually, the selling gets around to everything. As we're seeing now, it's gotten around to Amazon. It's gotten around to Netflix. It's basically finding, and what you guys were talking about this before, your sugar water or fizzy water, money's hiding in a few names, and at some point, they go after those.
Can you put your economist cap on quickly? Do you believe this sell-off in retail, does it mean anything about the consumer, or is this just a rotation?
Well, I would say it has to be that, are we going to 1% unemployment? Or to me, it's probably all peak, right? That it's as good as it could get, and that the market is now saying, yes, maybe this is as good as it gets, and that you can't comp these numbers year over year, and that the valuations don't support it.
So Carter, you just put up a bunch of names, but you did mention Amazon, and we know how Home Depot acted a couple weeks ago and how Walmart acted last week. Those are the mega cap ones. They all just acted horrendously. Amazon did have bad news, but does that just not portend well for everything?
And you refer just to an old-fashioned act well. Of course, say how scientific is that? That's a great phrase. It's a technical phrase. It doesn't act well. They know it in sports. He's not playing well. Let's get him out. They don't act well. The tape is heavy. Something's not right.
Carter, thank you.
Thank you.
Carter Braxton-Worth, a Cornerstone Macro.
Well, I think Carter makes a great point, how the numbers on the retail side, 1% unemployment, what's already priced in. But speaking of acting well, I just think retail's acted so poorly going into a holiday season where it totally outperformed the S&P from Black Friday, Cyber Monday, gobble, by the way, God, I'm sure no one's said that to you yet. But the bottom line here is I actually think retail is going to have a great holiday season. I said it 2 weeks ago. I said it 2 months ago.
Do you think it's discounters, though? Will they dominate, or do you think that there's a broader picture than that? I mean, like, for instance, I like Ross stores. I like TJ Maxx, obviously discounters. I love Target. I think because of their diversity, that's a good name as well. And it's pulled down because of Walmart. And since that Walmart numbers, Walmart was over 100. Target's been down. I think that creates opportunity. We'll find out very soon.
Well, it's a good question, and I think the kind of the demographic that's been most helped out by wage gains is absolutely the Target and Walmart shopper, and I think it does bode well for them. But I think some parts of discretionary are going to do very well. And again, these are companies that have actually given you decent guidance in the last numbers. I don't think they've been off.
Amazon did not, guys. Amazon guided revenues down 5% into their holiday strong quarter. And I'll just make one point. All these companies, Target, Walmart, they're all doing better in e-commerce. Amazon was dominating, getting every other dollar of new growth there. Now we're starting to see it.
That's good for everybody.
It is. Well, maybe it's just less profitable for everyone else. Everyone has to match on all the free shipping and all that.
I think that's in the price. That's what we assumed, that their margins were going to zero.
Well, let's see what Target puts up tomorrow.
Who has the margin and who doesn't? Target has margins. Walmart does not.
They're tripping over each other to get you your stuff that you bought like an hour later. I mean, this is not profitable sales. We'll see.
Coming up, stocks seeing red again today as big tech dragged down the market. But Guy here has one name he says could see a major year-end rally. He'll tell us what it is. Plus, the stock sell-off, investors are worried the high-yield market could be signaling more pain ahead. How big of a threat is corporate debt? We'll explain when Fast Money returns. Welcome back to Fast Money. Another dismal day for the markets. The Dow tumbling 400 points, and along with the S&P 500, erasing all the gains for the month. Tech and consumer discretionary stocks dragging down the market with only two sectors in the green. Utilities ending the day as the best performing sector. But despite today's sell-off, Guy is looking at one stock that could be poised for a year-end rally. He's over at the Plasma to break down his fast pitch. Guy.
Hi, everybody. Hi, Guy here at the Smart Board, and we're gonna do a power pitch. I didn't have the mitt today. I apologize for that, but we're gonna do the Valero. Symbol is VLO, and you'll say, "What are you talking about? Refiners have been grim death." And you're right. Valero, after making, I think, an all-time high of 127, is now trading $80. That's a significant sell-off, folks. But you know what? I happen to think the sell-off is significantly overdone. Number two, crack spreads are not nearly as favorable as they were 4 or 5 months ago. But they haven't totally collapsed yet either. Not nearly as much as the stock would suggest. So to me, the crack spread is still somewhat favorable. And the last one, recent upgrade at Credit Suisse on November 1st. They like it as well. Now, the stock has sold off recently on the back of that, but I think at this level, it's very interesting. Let's put up a chart, please. And you will see, as Dan just told me, we're at levels that we last saw back in the fall of last year. So there's a very good chance around this $76, $77 level where we basically are. This stock gets very tradable. So although obviously energy's been under tremendous pressure, in my opinion, valuation, sell-off being overdone, still somewhat favorable crack spreads, Valero makes sense at this level.
We can all see how bad that line.
That line's not bad.
We don't
bad.
That's
not even a line.
Do you have any questions for Guy?
I do.
Okay.
Go ahead, Tim.
Guy, I'm actually kind of in favor. This is a tease to how I'm going to vote, so you might have one vote. But talk about either crack spreads or the dynamic here where the cheaper oil gets, the better it gets for refiners. And remember that they were big outperformers the last time oil was trading off.
It should. And you get, there's a seasonality factor that should actually start to work for them as well. But it hasn't worked out because I think what's happened is people have had so much gains in the refiners to Tesoro Valero that I think they're taking money off the table. They're selling first, asking questions later. Look, the environment is not nearly as favorable, I think, to your point, but it's not nearly as dire as this move suggests. So although I think the sell-off is somewhat justified, it's not justified down to this level, $80.
Guy, a real quick question. Mark Fisher was on today and he was talking about he thinks oil has hit basically call it a bottom. And there's more room to the upside. Do you agree with that at all, or not with this Valero call?
I need a quick answer here, but I'll say this quickly because that's what only time has for. But I'll say this. The move to the upside in nat gas, that's why I think we saw that significant move lower in crude. I think energy traders got themselves offsides in nat gas, and that's why you saw the precipitous sell-off in crude oil. They had to trade on backwards.
Time to vote. Are you buying or selling Guy's pitch on Valero? Pete Najarian, what do you say?
He's very convincing. I put Guy as a winner. Guy is a winner.
Oh,
Winner.
Is that Guy?
That's Guy.
All right.
There you are. That's
you are.
Yeah, I agree with Guy. He's definitely. Wow. Thumbs up, buddy. Thumbs up.
I
don't disagree with Guy because I don't know much about Valero, but I just think we're in a market right now where you see the underlying commodity move the way it did, and this stock moved that way. I don't know why you have to try to be a hero and catch a falling knife here.
2 buys, 1 sell. 2 buys,
sad.
Guy. That's not bad.
He's sad.
But are you at home buying Guy's pitch for Valero? He's really sad. So go vote. At CNBC Fast Money is where the poll is. We will reveal the results later in the show. 78% so far say no, but there's still time to vote. Plus, the Bitcoin horror show continues as the crypto cracks below 5,000 for the first time in more than a year. Can anything stop the bleeding? The traders will weigh in. More Fast Money still ahead.
Fantastic to see. That being said, as we look forward to the fourth quarter, I will tell you that we do anticipate the delivery expense potentially deleveraging at a slightly higher rate in the fourth quarter than it did for the course of the year. And honestly, that just relates to the fact that there's just risk of upcharges from carriers as it relates to forecasting and volume coming through as everyone tries to rush to get that last order underneath the tree for the customer. As it relates to CapEx, we haven't finalized our plans there yet for next year, but we are looking at some expansion of our distribution facilities. So it wouldn't surprise me if our CapEx did uptick next year versus what we're planning for this year.
CapEx, capital expenditures. That's a chart.
to expand our distribution facilities within Europe, and that's a nice thing because it's due to the growth that we've experienced in Europe, and hopefully some efficiency that we can get out of a new facility down the road, as well as potentially a furniture facility here domestically. And again, that's also a good thing, is it's due to the strong growth that we've experienced in furniture.
Thank you. And our next question comes from Janet Kloppenberg with JJK Research. Your line is now open.
Hi, everyone, and congratulations on a really, really high-quality quarter. Frank, first is a point of clarification. People are confused, and then I'll follow with my question.
Just not be that high quality because it's starting to sell off.
Is 32.3. That's what I'm using. So you're saying that, to clarify, that gross margin could be up as much in the third quarter, as much in the fourth as the third, compared to 32.3. If you could clarify that. And my question is, on gross margins, looking at the fourth quarter and
this is Urban Outfitters conference call.
I think there's some favorable trends on own brands growing as a penetration. Maybe you could talk about, or Dick, you could talk about the opportunity there and how much the growth of national brands at Urban Outfitters may constrain that opportunity. Thank you.
There's a lot of moving pieces. So what you're referencing at 32.3 is backing out the impairment charge that we incurred last year, which was roughly $1 million. If you were to reference that number, our forecast based on margin improvement would be less. It'd be in that 30 to 50 basis points range. And what would be driving that would be potentially, and what we're hoping for is lower markdown rates, with Anthropologie leading the way there. Potential IMU improvement driven by all three brands, as well as store occupancy leverage. What I will tell you is that we're hopeful that this is a conservative plan. I think with the holiday environment out there, we want to be conservative, as you never know exactly how promotional the holiday is going to be. As I did mention earlier, delivery and logistics, I think we're hoping that we have a conservative plan there, but we always run the risk of running deleverage at a higher rate due to the potential carrier upcharges, again, related to capacity, volume, and forecasting. And lastly, I will say that there still is some impairment risk in the fourth quarter this year, while not nearly as much as we had to record last year in the fourth quarter, but depending on exactly how holiday performs for certain stores that are on the watch list, there is some risk around their store impairment in the fourth quarter as well. And again, I am hoping that this is all conservative, but it is where we're planning the business right now based on where we sit.
And Janet, hi, it's Trish. I'm going to answer your question about the brand penetration in the urban brand. As you know, national brands has been a really important part of our mix, since inception. And if you look at penetration in women's, for example, which is our biggest division, it's a small minority. It's certainly not material when you look at the penetration from own brands, particularly in women's. And going forward, we don't really see any big shift in penetration for branded products in women's.
Thank you. And our next question comes from Simeon Siegel with Nomura Instinet. Your line is now open.
Thanks, good afternoon, guys, and congrats on the ongoing strength. Frank, just to that point, just to clarify, so like you said conservative a bunch of times, so recognizing that, just any help thinking through next year's gross margin or just the opportunity there, just given that moderation, you have the sales strength, clean inventory, IMU. So any help thinking through the go forward gross margins? And then I think you mentioned the impairment. Any way to quantify the range of what that might be that's baked into Q4? Thanks.
Yep. Thanks, Simeon, and I hope it is a conservative plan. All I can say is on the impairment, there are a couple stores that are on the watch list, and it will depend on how holiday sales come. But the number would be, we believe, hopefully meaningfully less than the $11 million that we incurred last year. And then as it relates to fiscal 20, I think for us, we just want to get through holiday right now, and then we'll have more to talk about related to the opportunities and the initiatives that we have on fiscal 20. But I will reiterate, I think that the biggest opportunity that is in front of us is to recapture further markdown rate opportunity at the Anthropologie brand. While that brand has made significant strides this year and great progress, there's definitely still opportunity for them to get back to where the brand historically runs when it's performing this well on a top line basis.
Thank you. And our next question comes from Mark Altschwager with Robert W. Baird. Your line is now open.
Good afternoon, thanks. Frank, could you update us on what you're seeing from a rent and occupancy perspective and your ability to drive some savings on that line, especially given your comment on the watch list stores? And then separately, just following up on the inventory topic, obviously nice progress there. Just bigger picture, you give us a sense of where you think inventory turns can progress to over time. Thank you.
Hi, Mark. This is Frank. So as it relates to rent and occupancy, I think right now the way we look at next year and most likely the year after that is on a cost basis. We believe that our rent and occupancy is going to remain flat. I think we remain incredibly disciplined as it relates to renewals.
Wow, this thing's on the sell off. Wow. Wow.
If we can't get deals to pencil, we are willing to walk away from locations where we can't go and get those concessions. And being able to keep the occupancy dollars flat gives us that opportunity that if the store comps are flat or even slightly negative and the digital business continues to perform where it does to flow through some margin and some dollars flow through there.
What?
Mark, this is Dick. I just wanted to add to that we are seeing reasonable rent reductions in deals that were.
So they went heavy for this quarter to boost up their revenue, but it thinned out their ability to
deflation in rent
factor in their Q4 margin value.
And our next question comes from Dana Kelsey
on logistical shipping, this, that, and the third. And wow.
Good afternoon.
This thing is probably going to go red.
It seems like with the strength in sales and the merchandise margin improvement, there are some initiatives on product that seems to be taking hold. Whether it be the internally designed apparel at Anthro, it sounds like beauty and wellness also being very impactful movement, and then BDG going wholesale. As you see these drivers, are these the drivers for next year that drive merchandise margin, top line? What am I missing? And what could the sales lift in merchandise margins be as a result of these categories or others you see coming in? Thank you.
Dana, I don't think that these are the initiatives that are driving margins. Many of the initiatives that you discussed actually have slightly lower margins. Where we've seen the improvement in margins is around our traditional core competency, which is women's apparel, and having a more accurate call on the fashion, which has led to better sell-throughs and fewer markdowns. What's allowed us to do that? I would say that there are a number of factors that have done it. First of all, demand, because the economy is better and the fashion change, the demand for women's apparel and men's apparel as well has gone up. The brand, and then secondly, the brands have developed their speed to market capabilities that we just discussed. That gives them a shot at being more accurate, and I think that they have indeed become more accurate. The third is we have a couple of folks, a number of the brand merchants who were reasonably new to the brands, and they now have one more year of experience under their belt and better understand the customer and better understand the brand proposition that we offer the customer. So the experience has helped. And as we look forward to FY 2020, I would say that not only do we have an opportunity to continue to have a better IMU and slightly better markdown rate, as Frank has gone over, but we also have, I believe, an opportunity to very gently, and I want to emphasize gently, raise some prices. And I think that will help drive AUR and drive top line as well.
Thank you. And once again, ladies and gentlemen, if you have a question at this time, please press star, then one. Our next question comes from Janine Sticker with Jefferies. Your line is now open.
Hi, I'll add my congrats. Just wanted to follow up on some of the comments you made on the home category at Urban Outfitters, especially the novelty gifting category. Can you just remind us how big that is overall and then give us a sense of how much bigger it is in the fourth quarter? And then also, if I'm remembering correctly, I think that was kind of a source of markdown pressure in holiday last year. So if you could just help us frame up the opportunity now that that category is back on track and how you're thinking about that as a driver for holiday. Thank you.
Hi, Janine, it's Trish, and yes, you are remembering correctly.
Trish has some scars from that.
It was definitely an opportunity. The team spent a lot of time, really just getting into the customer's head and thinking customer first. And it's, while it's important to the assortment all year round, fourth quarter is really where we see an outsized penetration. I'm sorry I can't share with you exactly what that penetration is, but it's significant, and it's a great conversion and UPT driver in stores. Yeah, we're really excited about what's in stores right now.
Thank you. And our next question comes from Ike Boruchow with Wells Fargo. Your line is now open.
Hey, congratulations on a great quarter. Thanks for taking the question. Frank, just on the gross margin, so up around 30, 40 basis points in the quarter. Understand the compares are different. I guess my question is it relative to the rest of the year, is it more a function of maybe less maintained margin and store leverage? Or is it more a function of just more deleverage because of the holiday and some of the things you kind of mentioned earlier in the call? Just kind of curious the puts and takes within the gross margin line.
Yeah, Ike, this is Frank, and I think it's a combination of multiple things. One is I would say, the business did move into a nice positive comp territory at this time last year, and both Urban Outfitters and Free People brands are up against, I would say, more difficult comparisons as it relates to their margin improvement, as they did start to have nice margin improvement last year, as well as Anthropologie also started to have margin improvement last year. So some of that markdown rate opportunity now at each of the brands is a little bit smaller, especially at the Urban and Free People brands. In addition to that, yes, we do believe that there's potentially some more pressure on delivering logistics in the fourth quarter as there begins to continue to be a rush in order to get product to the consumer.
Thank you. And our next question comes from Susan Anderson with B. Riley FBR. Your line is now open.
Hi, good evening. Thanks for taking my question. Congrats on another good quarter. I was wondering if you could talk about, as you accelerate the international business, I guess where you think the penetration could go in terms of total sales over the next 3 to 5 years. And then maybe too, if you could just remind us in terms of margins, where they're at versus U.S. business. Thanks.
Okay, Susan, this is Dick. We think that there's an awful lot of opportunity in international. As a matter of fact, I was just reading an article today that said projects that in 2019, China will become the largest purchaser of apparel in the world, surpassing the United States. Now, of course, they also have 3 times as many people, so on a per capita basis, they're not better. But it just shows the incredible opportunity that exists just in one country. We think we have opportunity around the world. In Europe, we hope to add 10 to 20 European stores per year for the next 2 years and get to over 100 in 3 years. In the Middle East, we have recently signed a second franchise agreement to open stores in other Middle Eastern countries, and we're also continuing to open more stores in all the brands in Israel. So there will be growth there as well. And as I said, in China, once we can get inventory into the country and fulfill and distribute that inventory in country, then we can switch over from Tmall Global to Tmall Classic, which should give us anywhere, we believe, from 5 to 10 times bump from what we're currently doing. And then we have the opportunity also to start to open stores, which is our goal for not 19, but for calendar year 20.
Thank you. And our next question comes from Laura Champagne with Loop Capital. Your line is now open.
Good afternoon.
afternoon. Thanks for taking the question. Wanted to ask about cash uses, just because you're sitting on a lot of cash, even entering the fourth quarter, and the buyback is just at these levels not going to be a significant use. Are the international expansion goals that you have for next year going to use much in the way of this cash, or what's the plan for that stack sitting on your balance sheet?
So this is Frank, and I will say that we continue to remain committed to returning cash to the shareholder, but I think we'll continue to follow our historical strategy of being opportunistic when it comes to repurchasing when we believe it is most appropriate given our cash needs and external market conditions. And I want to remind everyone, I think in fiscal 18 we repurchased 8 million shares for $157 million, and then we just did repurchase 1.5 million shares for $58 million, and most recently in the third quarter. And we currently have 16.5 million shares, or 16.4 million shares remaining on our current repurchase authorization. So it is something that we will continue to do, but we will continue to remain opportunistic as to how we deploy that cash.
Thank you. And our next question comes from Edward Yruma with KeyBanc Capital Markets. Your line is now open.
Hey, thanks for taking the question. You guys have had some very nice success in wholesale, I think particularly at Nordstrom. I guess, some of these are probably locations where you don't have physical stores, but when you do, are you seeing any cannibalization? How is it changing kind of sales in those markets? Thanks so much.
Ed, were you talking about the Anthropologie home wholesale, the Free People wholesale, or all the above?
All of the above.
Well, I'll ask Andrew to talk about that in terms of Anthropologie home, and then Sheila talk about it in terms of Free People.
Yeah, hi there. So we haven't seen any cannibalization actually since we launched Anthropologie Home in Nordstrom, and the Nordstrom locations are in similar locations to our Anthro stores, because one of our goals is to acquire new customers. So that really seems to be what's happening. We are very confident in next year we can double our sales with Nordstrom still. Without even thinking about cannibalization with the Anthropologie customers. So it's a win-win for us. It's sales growth and non-cannibalization of our core offer.
Hi, this is Sheila. I would reiterate the same thing for Free People. Ever since the beginning when we were launching wholesale and retail stores in similar locations, as long as we're with the right partner, we see a win for the total brand, and that continues to happen in all cases.
Yeah, if I can just add my 2 cents to that, what we've seen many times when we open a Free People store in a mall that actually has another one of our wholesale outlets in it, whether it's Nordstrom, Macy's, or whomever, actually the sales of our partner in those malls go up, and Free People does quite good business on top of it. So it's really just an expansion of the brand.
Thank you. And that concludes our question and answer session for today's call. I will now turn the call back over to Mr. Richard Hayne for closing comments.
Thank you so much, everyone, for joining us on the call. We look forward to getting back together with you in 2019. Thanks.
Ladies and gentlemen, thank you for participating in today's conference. This concludes today's program, and you may all disconnect. Everyone, have a wonderful day.
Yeah, just watch y'all stock sell off that conference call. So apparently somebody wasn't happy. Yeah, that's pretty much how this market goes. Here today, gapping down and selling off tomorrow. Same thing with this NUNA trade. Again, it previously gapped up off the unhalt, squeezed up, and now it gapped down. Now it's down here at 15.54, shedding well over 77 cents here off the intraday trading. So something in their conference call or earnings number wasn't necessarily sitting well with investors or institutional holders, and the stock is obviously pulling back. So as of now, only Intuit is up still. I know PSTG, again, that was one of the stocks I took long in the earnings, is still up right now, 5.6%. I'm excited about that. Jack in the Box another little store kind of like Red Robin's, little fast food burger place, I'm guessing. They actually beat on their earnings, only up 2.4% after hours. Not a ton, not a lot of volume as well, but still early. TJ Maxx obviously up a little bit here after hours, 2.1%. 4 million shares traded, though. That's interesting. NEO as well back up today. Had a great day in the market today. NEO had some great favorable ratings and price target raises from some analysts and other people that are excited about the stock. It went up to $8.21, somewhere around there. On a high, now it's up after hours a little bit, about 2%. So again, still got some stocks moving around a little bit. BECN had earnings tonight as well. They're up. Well, excuse me, they're down the biggest tonight. BECN. I actually was going to take puts to this stock too in the earnings, and I didn't take it. Now I'm kicking myself. I actually wanted to short this stock in the earnings. BECN. True story. And now it's down 10% after hours. Yeah, okay, I missed that one. Can't get them all. Can't be greedy as well. I'm still humble with what I have. But just knowing I was right in terms of my analysis value on that stock into its earnings, and here it is down here after hours, down 10%. The biggest loser on the night, actually, so far. So again, that's the part of the game. All right, Campbell Soup has earnings coming up this week too. It's down 1.1% after hours. That one they're struggling. Again, there's just so many opportunities out there. In terms of that we can trade and leverage and take advantage of some of these stocks. So again, just excited to be able to share again whatever little value knowledge I can to help you guys out. Hey, what's going on over Sunline? My bad, I didn't see it earlier. I had a phone thing down. I couldn't see the messages. Yeah, again, guys, look, always check my description box. Y'all know I have links down there in the bottom. I do have some discounted links as well for TradeNet as well. Under my affiliation with them, I have the lowest price possible to get into their trading packages. Right now, they're running that little Cyber Monday and Black Friday deal. Their lowest, possible deal ever, in which they needed to be lower than that after what they just, came out of with all this little, scenario. So, but either way, I do have links in my description box. If you have questions about those, hit me up. I can explain them to you. Black Box Scanner, another affiliation I have. Obviously, my mentors scenario that I have with WeTrade HQ. Again, definitely click that link if you want to get some good, solid mentoring to help you get started. Again, very cheap value, $1 a day value. It breaks down to $1 a day for some knowledge to help you make thousands of dollars, right, or whatever. But either way, definitely support what supports you. Basically, is the name of the game. And if it's beneficial, you can find value in it, support it. Especially, obviously, I don't go around asking people to support me, but if you definitely want some knowledge too and to help you out, hit me up. I'll do everything I can to give you some good information, good knowledge. All right, so guys, I'm gonna get ready to sign off here for the evening. My family is just starting to get in as well. Power and profit to you all. Uncle Johnson Neb, I thank you guys for stopping by, sharing some of your time with me. I'm humbled by that. I look forward to tomorrow, as well as Wednesday. Hopefully I can do a whole entire day tomorrow if I don't get too busy, and we can rock out some nice trades together, go over some ideas or whatever like we used to do a little bit, and again, make our day, fun and exciting and profitable in the same breath. All right, so with that being said, again, I want to say power and profit. Extend you guys a great evening, and we will pick this thing up again tomorrow in this market analysis and get after this market again. All right, salute, guys. See you guys in the AM.